Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. I'm joined by the lovely senior economist of NinjaTrader Live, Tracy Shuchart, and also the lovely Tanya Trades, independent trader and content creator. She was vlogging in here earlier, vlogging. I'll get that word right. And I know. That was cool. I thought that was a lot of fun. You guys got to go check out what she was vlogging in here. That's on your YouTube channel.
Behind the scenes footage of the NinjaTrader studio.
Yeah, that's really cool. I think we need to start doing that. I asked her to send me the link. Deli might start vlogging here soon. It's could happen. And of course, we have our senior market strategist, Jim Cagnina. Good morning, Jim.
Morning, everybody.
So, any news yesterday about NinjaTrader that everyone's kind of wondering about?
I heard something. I don't know.
Yeah, gosh, I don't know. What should we lead with today?
Flashed all over the headlines.
Instead of getting into that news this morning, today at 11 a.m., Marty Franchi is going to be on with me for an exclusive to talk about Kraken and NinjaTrader. So all of those details will be revealed after the morning trade session with our boy Christian from Trading Boxes, who will be trading here today. But Marty and I will talk about what happened between Kraken and NinjaTrader and take all the rumors off the table. We'll say what's real, what's happened, and all of that. And so stay tuned today at 11 a.m. Yeah. So that's what we have today at 11. But Jimmy, yesterday you had Mentor Q. I thought that was fantastic. I think everyone should go back if you didn't catch that yesterday and watch that. And I know this morning you'll talk about it in your Edge report. That was a lot of fun watching you guys.
Yeah, Fabio is fantastic. He's so enthusiastic. He's out there adding new stuff to his product offering all the time, and he's very passionate about it. I love talking to that cat, man. And he's got some great info that we paint on our charts every single morning.
Yeah, and when we get to your Edge report this morning, we'll be talking about it. Do you have any guests for today, Jim?
Today, no, I think I'm gonna be freestyling it today. No guests today.
I love
no special guests.
Freestyling it.
I love a Jim freestyle. Those are fun. Jimmy's the best. Tanya, last day in studio. Mm-hmm. You've really got this Naples look going on now, right? You got a cool jacket.
I kind of mixed it up a little bit. This is a New York jacket. We're not gonna. We're not gonna go for Naples. Bought this in New York.
She's like, not quite Naples yet.
No. But the pants are. Yeah, I got the white pants going on. Gotta mix it up, make it a little bit brighter, lighter for Naples, Florida. I mean, it's crazy here how it's 53 degrees in the morning and then it's 80 by like noon.
I know.
I gotta wear layers. Yeah.
It is. The winters here are gorgeous, and we look forward to having you down here for more of these in studio.
You said Kane might be coming.
Yeah,
soon.
Kane might be here. I think not this coming week, but the following week. Okay. So we emailed back and forth last night, so I think we might have Kane in studio.
I think he's gonna come. Yeah, definitely. I mean, when in Florida, gotta extend it. Gotta extend the trip.
Of course, he's in Miami. Right?
Yeah, I mean.
Yeah, I don't blame him. He's 31. We talked about that yesterday. I'd be over there too. Shai, you used to live over there in Miami. A little different living on the west coast of Florida?
It is a little different living. It's a little slower pace over here.
It is a little bit. Like, I've only been in Fort Lauderdale and Miami mostly this year. And yeah, it is definitely slower pace, but it's fun. Nicer, like, to walk in downtown area. It's way nicer.
Oh, yeah. Our beach is much nicer.
You have nice art galleries.
Yeah, we do.
Yeah.
Actually, one of the guys that helped build the studio, his wife is a big part of, what do they call it? It's supposed to be art is. Everyone's got all the different names. It's artists in Naples.
Okay.
Yeah, and they have a lot of really nice art. Like you said, and just a really nice museum here in Naples. That's probably like the one highlight attraction that I know that I've been to. I haven't been to the botanical. Art is.
Okay.
So it's artists.
Okay.
Art is. I don't know, whatever I say, it's usually wrong.
You border. Deli, you border Marco Island, right? Is that the next stop down?
Yes, but it's surprising how big Naples is. Have you guys not noticed that?
Yeah, it is big.
I know, yeah, because I'm like,
It's
oh, wait, it's a
long.
40-minute drive away. What? I'm confused. Everything looks close on the maps, and then it's like, oh, 30-minute drive.
Yeah, it's very long from top
Yeah.
to bottom. You got Marco Island, that's really small, and then Naples is huge, which is Collier County, and then you get up into Estero, and then Bonita Springs and Fort Myers. But yeah, it's a unique place. I mean, obviously, it's gotten massively popular over the last since COVID, and it's kind of really finally like kind of tapering out a little bit now. At least it's too nice here. I loved it when it was just a beach town. I remember living from downtown Chicago to living here. I was like, this is great. Now there's traffic and all that, but so overnight was interesting. This morning I came in, I'm texting Shy. I'm going, what the hell's going on? We're breaking. I saw Tanya go.
I tweeted.
Yep.
I was like, oof, we just took out all the gains from FOMC, like right here pre-market, pretty much during the London session, starting at 4 a.m., right? Just a drop.
Yep. And then
we had the dollar rip, we had treasuries rip, and we had not only U.S. futures, but markets in Europe also fell.
And so was there any headlines behind that, Shy?
No, really, I mean, I think it all stemmed from that dollar rip, but really what everybody's saying is it was some sort of sentiment shift and could have been sparked by comments from the ECB, where Christine Lagarde came out and said that U.S. tariffs have raised uncertainty over the economic outlook, so that kind of sent jitters across Europe and the United States.
Yeah, I mean, the chances I can't hear Tanya, I could hear you fine. Do a quick sound check with me.
Check 1, 2, 3. Check.
Just double
I
checking.
am hot. It says.
Yeah. Okay. Good.
I can hear you.
Yeah, I could hear you. Just want to make sure that it wasn't us because we were going.
Can they hear me on YouTube?
Yeah, someone on
okay.
YouTube said it. That's why I was just double checking. Okay. Cool.
Okay.
Thank you. So, also, why don't you set us up for data today? Actually, we have some data I think is going to be market moving. I think today's going to be a busy day.
Yeah, I think so too as well. So we have at 8:30, we have initial claims and continuing claims, jobless claims, and as well as Philly Fed, manufacturing. And up at 10, we have existing home sales.
And following the Fed, can you do a little bit of a recap for us just to kind of give us insight as to, I know that you had Tony Nash on there yesterday. That was a great conversation, by the way. I thought Tony was a great guest.
Yeah, he's fantastic.
I mean, give us just a quick recap of what was said by the Fed yesterday. And I just want to know, because as we come into today, if there's anything, it's always interesting to see. I've said this a million times. Day one's the overreaction. Day two is the reaction to day one. Day three is what we really find out. But ultimately, I want to be looking at, X or looking at any headlines to see if anything is contradicting to what maybe the Fed said yesterday. So you give us that recap. Yeah,
so really Powell kind of downplayed growing risks. He brought back that term transitory and said that the tariff impact was transitory, which, sent the financial world above a buzz, because we haven't heard that word in a while. But really, that's kind of why we saw a rally in the U.S. We also saw a rally in treasuries, because there was kind of still that uncertainty, but kind of gave some clues that, he thought that inflation was going to be okay, which led traders to think that maybe we'll have more than 2 cuts. They started factoring in actually 3 cuts for this year after his comments. And so I think that's kind of the gist of what he said and why markets reacted how they reacted right after the Fed yesterday.
Got it. And Jimmy, I want to go to you. Just initial market reactions yesterday. Give us kind of a rundown. I know we're going to Yard's report not too long from now, but just like, did anything kind of poke out at you and say this was kind of interesting in how the markets reacted to the Fed?
Yeah, it's the last 4 days. Let's take the E-mini S&P as an example. we've been kind of range bound, right? The top of the range is approximately, and again, I'm going to use the bodies of the candle here, but top of the range is around 57.31. The bottom of the range is around 56.70. So it's a relatively tight channel we're trading in right now. And every single day we trade around that 8 EMA. So I think there's some consolidation going on. And yesterday was, I think we're at a place right now where the next couple days could kind of shoot this momentum one way or the other. Looking at the edge full stats here around FOMC, today and tomorrow are supposed to be green days. They're supposed to be green days after the FOMC. Not getting that yet, so we'll see what happens.
And we've already got your charts up. I mean, Tanya, just quickly before we go to Jim and he kind of takes over here and goes over the edge report. What did anything come out at you yesterday? And I know we're going to get to your full. We got the Tanya Army ready for 9 a.m. every day, which is great. Before we get to your charts, but did anything like kind of stick out at you? What happened yesterday?
It was pretty interesting that we had the manipulation lower from 2 to 2:30. So the initial move was the false move, and then at 2:30 when Powell started speaking, that was the correct move to the upside. And then we did have that retracement to about 50% of that range, and we continued up higher to on the 4-hour. ES took out its next swing high and the one above that. So I think it's pretty interesting how we have a small divergence on the 4-hour I'll get to later, where ES took out that swing high and NQ paused right before it. So that could be the divergence at the top for us to go lower, because pre-market has set a bit of a tone here with that complete retracement back lower. But I don't really love when that happens pre-market, because then it could mean for a slower New York session if we have a large drop during London already.
Yeah, I mean, the divergence that we're seeing, I think, is going to be the heaviest weight on the shoulders of the bulls right now, because
they have to keep that up.
Yeah, because momentum.
On the bottom.
They need momentum in order to get this thing to go back up.
Yeah.
All right, Jimmy, let's go to you for the edge report, and we'll take a look at what you got going on your charts.
Yeah, so I was just kind of So you caught me a little off guard here, because I was looking at the 10-year Treasury notes right now. And again, consolidation. I mean, we have a lot of support down here around 110, 18, 30 seconds, and then resistance up top here about a handle higher. And this has been sideways forever. Now we're trying to break on through to the upside again today. So I have my radar screen up as well. And 10-year notes such an important market. Tracy was talking about the spread between the 10-year and the 2-year yesterday, and I think we're at about 26 basis points now. But from a Menthor Q gamma level, we're approaching that 1-day max, which is, if you think about the daily chart I just showed you, I'm looking to see if we can get a breakout out of this range finally. I don't know. But that's what we're kind of tracking right now. Nice kind of little rally overnight. Going back to the E-mini S&P, and again, we're in June right now. You can see there's still some, March is still on the board, only for a couple more days. The separation in price, remember, between the two contracts is still 50 handles. It's still pretty big. But I'm going to be focusing on the June contract and the gamma levels right now. We've kind of traded through JAX 1, which is the biggest gamma level that we want to focus on. And we're a little bit above it right now, but pivot's in the way on the upside. JAX 2 is in the way. So we have a really tight JAX 2 and JAX 3, which isn't always the case. Sometimes there's a lot of separation between the two. So right now, I don't know. I mean, it's anyone's guess. We have jobless claims coming out that might kind of push the needle a little bit. We had a lot of nice volume overnight, point of control up around 57, 56, but pretty decent sell-off after that. So this is looking a little bearish. Menthor Q's Q score on this thing, negative gamma condition. It's just red, low, 110 Q scores here. So it's a pretty negative picture right now for this, according to their gamma levels and their Q scores. So let's go down to crude oil, not now, because crude oil is also kind of range bound on a daily chart. And I'm just going to go ahead and turn that off. Range bound. I mean, look at this kind of hamburger bun I've got right here on crude oil market. This is the May. I know it's a continuous chart. But it's a pretty tight range, right? There's no trend right now. And we're just tagging this 8 EMA almost every single day. So again, until there's a breakout, it's sideways trading in my mind. Going to the gamma levels here, we got Jax 1 is right there at 67. So again, we kind of traded through that, and now we're back up to hit that Jax 3 level. We got 408 at the top is resistance, and then R1 is resistance too. I like these pivot numbers. We got the pivot here is support at 66.86. So again, this range is set so far for today. We'll see what happens. Really nice volume profile, by the way, and it's great to see some of the younger kids from Order Flow Labs using this volume profile, man. I love this volume profile. I've been using it forever. Point of control right now is at 67.23, and I'm tracking the whole session on the volume profile. Later on, once the opening range kicks in and we get some more data, then we could go ahead and anchor it to the open on forward. But right now, I'm relying on that. So again, kind of sideways right now. Gold, let's go to gold. And again, I want to look at it daily, just give us some perspective here. Nice breakout on the gold, right? We had nice area resistance, and this is still support now, right? Resistance becomes support. I learned that from Jack Bros way back in the day, and it does kind of work. It's a thing, right? I'm not making it up. So in any event, we're way above it though. The moving averages are all just shooting up to outer space right now. A little bit of a pullback today, but still kind of a baby candle so far. We'll see what happens with these wicks as we go forward here on gold. And dollar made a huge kind of turnaround today. But before we get to that, let's just look at the intraday charts. I got the 30-minute chart up here right now, and let's take a look at some of those gamma levels. We got S1 right here, which is a pivot, which is pretty important level. I don't know what this line is. Let's delete it. Happens you ever have these lines that are on your chart all the time and you're like, all right, what is this from? That's a relic from yesteryear. In any event, we're right up to the high vol level here for the 0 DTEs. And this is like this is the case where I would like to do a retracement. I would put a fib line here, and I would go ahead and measure the whole day, the whole session, high to low, and just kind of see where we're at. So when I see this kind of sell-off in a market like gold in particular, benchmark candle right here, 6 to 630, that's going to set the pace for the day. And then we have this retracement back up to the 38.1%. This is textbook right now, right? The question is we going to stall here and keep selling off, or are we going to drive up to the next level, which the call resistance for the regular calls as well? I say the regular calls, but in addition, the 0 DTE calls up here right at the pivot as well. So this is going to be an important level on the upside, 30.50, but we're still way over that 3,000 level. So things are looking rosy for gold, even though we're having a little bit of a pause today. Let's keep rolling here, folks. Let's shoot over to silver. I know Tracy loves the silver market, as she should. So we're selling off. This is the third day in a row. We're kind of like we peaked out. We didn't quite hit this long-term area of resistance. We came close though, 35.04. We sold off, and there's that 8 EMA again. These 8 EMAs are so important because when I see these things, it's like, all right, it kind of is a measure to me of are we going to trade? Are we trading sideways, or are we trending up or down? And you could see, we have separation between the 8 EMA 1, 2, 3, 4, 5, 6 days in a row, and now we're back at it. So there's definitely a retracement back here as well. And then just looking at the intraday. The 30-minute, again, similar picture to what we saw in gold. I do the same fib line. It's really easy to do, especially with the NinjaTrader desktop platform, which is my favorite platform of all time. And look at that. We tag the low wick of the day is Mentor Q's 1 day min, right? I love when that happens, man. It's like, oh, this is so cool. So in any event, we're there right now, driving up to that 38% retracement, which happens to be put support for the 0 DTEs. So that's pretty cool. Let me just adjust something here. All right, let's keep rolling. Let's go to Dr. Copper. Dr. Copper has been a great story, man. This is like on fire. On Del Fuego? What? I don't know. How do you say it in Spanish? I got to move this over a little bit. Again, I just threw another fib extension up here. But, this is just nonstop rally right now. It's pretty strong. There's nothing but blue skies up above. It's hard to kind of figure out what targets are up above because there's nothing to measure it, right? We're just rolling here. So this is a pretty powerful level right now. Now, Dr. Copper, what we've seen in the past when we have these big rallies, every once in a while you get this big day where there's a big shock and everything kind of breaks down. But right now, so far so good. Looking for places to buy in Dr. Copper and just kind of moving again to check out some gamma levels in some other areas of interest. We have the call resistance for the 0 DTEs, gamma wall they call it. That's pretty impressive, right? Gamma wall. We just kind of wicked up to it last 30 minutes, sold right back down. JAX1 is on the radar screen. And I can't overly stress these pivots, these daily pivots, or the floor trader pivots, as we used to call them, right down here by JAX4 as a target on the downside. So we'll see if this is going to be range bound or not today. But again, bias is long, bullish, looking for places to get long in Dr. Copper. Those are the major markets, I think, at this point that we're looking at. Let's just take a look at NASDAQ real quick if I have a couple seconds left. Let's do it. Let's go back. Let's start with the daily. Let my charts percolate here a little bit. So again, we're seeing some recent consolidation, right? Big sell-off. All the moving averages are kind of arcing down. We have that 8 EMA right here that is in play again, right? Separation, 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 separation. Then boom, 8 EMA. We're starting to spend some time here, and we're kind of consolidating sideways again. So from a technical point of view, I'm open-minded today. I know it's a negative gamma situation as well. Really, the only thing that's a positive gamma situation is the treasuries and the metals, or some of the metals. But in any event, here are the levels right now. I mean, pivot's right in the middle, which is weird. This volume profile is really wonky right now, but it usually is early in the morning for the Nasdaq. It just bounces around so much, kind of like popping popcorn. So this will mature though. The volume profile will mature at a certain point, and the more time we spend down here, we can get a double distribution. So that's what I'm seeing. Back to you, Deli.
Thanks, Jimmy. Back in studio here with Tanya and Shai. Tanya, looking at Jimmy's charts, the one thing that comes out to me again is this divergence with the NASDAQ. I mean, even like on the 8-day moving average that everyone looks at, super simple stuff. NASDAQ just cannot hold its ground. I mean, It just seems weaker and weaker. Every time I look at the chart, I'm like, is it bear flagging? Like, I feel like every time I'm looking at it, I'm getting more bearish. But then I look at my S&P chart and I'm like, really?
Yeah, I know, right? I mean, when I used to trade options, I was definitely looking at the 8-day EMA. And when I saw that just now, I mean, it can't even get above the 8-day, and it's been just consolidating below it. It's not looking too hot for the NASDAQ. I mean, S&P, it's been breaking those little swing highs. I think we broke Monday's high, the one I was talking about, on the S&P 500 yesterday during the afternoon session after Powell's speech. The NASDAQ could not even break that. So it's not looking too good. We're having an inside day right now, even though we did have that drop during London session. Currently, we're still inside yesterday's range. And, I don't really love trading range-bound action.
Yeah.
So got to keep, I'm also open-minded, just like Jim just said. I'm pretty open-minded. I'm slightly bearish. I don't want to be really shorting too much in a discount and then getting, stopped out because we're range bound. So I'm going to be careful and choosing my spots wisely.
Yep. And remember, we have Tanya at 9 and we'll go over her charts. But before that, maybe we get some news this morning. Is it going to be market moving, Shai, do you think? I mean, give us a preview of what we're looking at.
Yeah, so we're looking at initial claims and continuing claims. Now, because of all the firings or people quitting in DC, people are going to be really looking at this number to see if we see a big jump in jobless claims. Now, mind you, the Fed starts getting worried. If we start seeing that number come in, the forecast is 224,000, which is kind of what it's been. If we start seeing a huge jump in this number, over 300, over 350 for any length of time, that's when the Fed starts getting very concerned. So we'll be looking at that number and see what that comes in at.
Going back, it's going to be important to see here on this data, because if this bond market starts to rally you start to wonder
Pressure
what
on-
people think.
Yeah, you're going to start seeing even more pressure on equities.
Yeah, and so this jobs number I think is pretty important because when I was looking at my 10-year chart, Tanya, you look at 10-year at all?
Not so much.
No. It's upticking into a new high again
Yep.
right now, and it's just like
Exactly.
as I look at it,
I'm
as we
watching
lead
it.
into this, it's like if that starts to happen, I mean, it feels you're not seeing silver's down, gold flat. We're not seeing buying come into that, but
Right,
we're seeing
but
it come into treasuries.
Come into treasuries. But, we've been seeing it come into gold for so long while
Yeah.
treasuries
Could be
really haven't
rotating between
moved.
them.
So, exactly.
Yeah.
Hmm.
I know we're just outside of data. Everybody watch this 10-year this morning and see if that continues to go. We'll go to Shy for the news right now as it's just seconds away. Keep an eye on the 10-year on this report initially as it's sitting on highs. I'll be also to see if they did start buying gold. If I started to see 10-year and gold rally on this, I would expect to be seeing pressure on equities.
Oh, absolutely. Absolutely. I think we're also seeing kind of a bit of rotation in those growth stocks because of the uncertainty into some more defensive, and that's why we're seeing a weaker NASDAQ than the other indices.
Yeah. News is
So-
about to hit.
So, initial claims 223 in line, 224 was expected. Continuing claims 1,000 or 1,892 in line again. So that's all in line. We are not seeing a big jump in unemployment, at least for this moment. Philly Fed manufacturing came in at 12.5, so that's up. That's a lot stronger than the 8.8 that they had expected. So at least in Philadelphia area, manufacturing is looking good.
In Philadelphia, it's worth $50. You guys remember in Trading Places? And he goes and he brings the watch in. He goes, "This is a Stad." I don't remember what he said for the watch. He goes, "Well, in Philadelphia, it's $50." I don't know why that came to my mind because you said Philadelphia. But
so no, I mean, in line, we're in line basically.
nothing
so
moved.
Nothing moved.
yeah, I mean, it's and so now quick preview for the we have 10 a.m. data today.
Right. And so we have existing home sales, which is expected at 3.95 million.
Yeah. And home sales, I think that might be a market mover today. I think today has the potential for a really busy day.
Mm-hmm.
But I think that this data point, even though this morning wasn't much, I do think that this maybe today, depending on what the market's doing, I think the market is looking for ways to find momentum. Don't you feel like that way,
Yeah.
Tanya?
Yeah, recently the 10 a.m. news has been like big movers. Like if I've seen even 150 point candles happening at that 10 a.m. So, new home sales today, existing home sales today could potentially move us. Definitely marking that out in my charts as potential. And leading up to it, if it's like 953 or something, I'm not going to take a position into that. Actually, recently, because it's been pretty volatile there during the 10 a.m. news, I'm not really in a position. We're leading up to it. I'm looking for some kind of, again, manipulation, or if it's a distribution towards my drawn liquidity there. So yeah, I'm actually kind of excited. We're finally having some news during the New York Open, during the New York trading session in the morning, because recently we haven't really, right? It's been pretty quiet. It's finally Thursday. It's after FOMC. So I'm looking for us to start breaking out of the range, either to the upside or the downside. So
It's funny you say that, as I feel the same way. I feel like this market's about to get busy. The roll is not complete until expiration, but it feels like a lot of, June is obviously the focus now. Obviously, the lagging, move from March to June is still always going to be there till full expiration.
We've got Triple Witch tomorrow.
Triple Witching tomorrow.
It's going to be a big day.
Yeah. So, all right. Well, we're going to bring Farm in now, and he and I are going to do some boomer talk on the charts. The old man.
Boomer Bollinger
Boomer
Band.
Bollinger bands. We've been. I know us old guys we've been pretty good though lately, and we've been all right. So let's see if we have Farm to bring him in for a little tape talk. So let me know when we have farm. And look, I can't wait to see what color shirt he has on today. I mean, I think he's gonna go navy today. Right now. Oh man, look at this. I mean, this is unbelievable. If I could predict the market
That's
the
for you,
way I
Deli.
can predict your colored shirts, I mean, you guys wouldn't see me again. That'd be it. I'd be gone. I just I knew I sensed it was navy today. I knew. How you doing, man?
I'm doing all right. Woke up to an interesting overnight session, that's for sure. But wild night, I guess. Europe was in a very bad mood, weren't they?
Yeah, they were. I know you look a little like your hair's a little like a little messier today. Like you've been up, kind of just grinding, watching the markets for a little bit. You're ready to rock, man.
Yeah, let's get it going. It's been a fun week. I think the next week's going to be kind of difficult, honestly. Like the next 4 or 5 sessions, maybe, because I think you guys were kind of talking about. It's like you look at some of these and you're like, is this one of those situations where this is going to like bear flag up another 5%? Where everybody's waiting for it to break down. It just keeps grinding higher and it just looks terrible at times. Or are we going to see some meaningful move higher and it just pops continue to get sold? But I mean, we haven't seen any horrible damage. I mean, I woke up and I opened my eyes and I almost slapped it long at like 56.90s. And I was like, okay, let's wake up and at least figure out what's going on because I'm real tired this week. So I was like, okay, don't be an idiot. Should have been an idiot. Would have made some money. But interesting night. But it's we still have some time before open and got the full day and there's no like catastrophic damage done here. But I do think that overnight low, to me, if you just want to use a couple of levels for today, it's like the overnight low, 57.26 are probably like the 2 levels if I just had to distill it down to 2. And then yesterday's high. I mean, this thing will scoot back above 57.26-ish probably.
Yeah, I'm gonna pull up my charts first, and we'll get into what I'm looking at first before
Please.
we get into farm. Age before beauty, I think, is what it is. Farm. I think that's why we're going this route.
Right.
I can't. Not everyone can be as handsome as my guy Farm. So let's start with my charts, and I'm going back to my daily when we get them up there. Nothing's really changed for me when I look at what's happening on the daily, and it really shouldn't. Anytime we start from the higher time frame, it shouldn't change much. So for me, when I look at my daily, it's just like, here we are. I talked about yesterday, 56.80. Talking about that simple 8-day moving average, which I think is, it's important. I like it because, shout out to Ripster and Sati. I like those guys' work. And I think that when you're looking at it just from the simple moving average perspective, I like to kind of just see where we are to identify the trend, right? Because obviously these moving averages have been coming down, but once we start to establish above the 8-day, it does give me, some idea that at least there's some price stability to the upside, and we haven't been able to hold it in forever. Now, we've had a few sessions where it's holding it, and that happens to be right at my 56.80-ish level. And so when I look at this, the moves now lower, the blips down are holding. And so everyone heard me talk about yesterday. It's funny, somebody sent me a message on Twitter and said, 59.30, was that a misprint on mine? And is that your target? Well, yeah, that's my target, but that's my target over the course of, it could be a couple weeks. I mean, I think it will be likely. I mean, it'd be interesting if it got there sooner. But we got a daily close above 56.80 yesterday. We're above the 8-day. I think, for now, as long as 56.80 holds, I'm bullish. And then when I look at the 60-minute, which is where I'll go next, when I look there, to me, we're rangy today. 57.52, 56.75. This 56.75, 56.80 is like a bad penny. It's like that penny that keeps turning up. You know what I mean? You're reaching your pocket and you pull it out. That number keeps coming there. We're actually going to have Pax on later today, which is, we didn't mention that early on, so I'm going to talk with him and see what numbers he has. He remembers them all too, which is kind of funny, right? He remembers every single number. I could question him at any point in time, and he knows every one of them, which I love. And we'll see what Tanya thinks as well, because I think a lot of us had this level ish that keeps kind of holding in S&P. And so today, again, long way to say it, I'm bullish unless 56.75, 56.80 doesn't hold. If it doesn't hold and NASDAQ is leading us lower, I would not touch a long. Then I think the market is just in trouble. But if it does hold, I think it could be a grindy upward day up to 57.52. If we get above 57.52, I think we get up to 5,800 plus today. I think the market's looking for momentum. We talked about this morning. I think, I don't know that the news necessarily today at 10 a.m. is going to be too impactful, but I do think that the market needs a spark, and maybe there is another headline. Maybe there's something, that gets it going one way or the other. But I would not be fading a rally if we hold 56.80, and I wouldn't be fading a break if we don't hold 56.80. That's my mindset for today. And let's take a look at what you've got, Farm. But that's the way I look at today.
Yeah, I think that's completely reasonable. I've got the 75 on there as well on my charts. And then, basically those low to mid 80s have proven relevant. I mean, we talked, coming in Monday about how, the bull's first goal was to break away, from last week's value. And, we broke away. We sort of got stuffed back in. We talked about how NQ came quite a bit more deep than ES did, right? ES didn't even make it, down to sort of the bottom of last week's value, popped back out again. Here it is getting sucked back down. But I mean, it's still basically holding, this whole prior week value. And so, if sellers can't find the sell button back within, last week's, meet, then I'm not too concerned. We've got, sort of this awkward, LVN here developing this week, and that's going to be important probably next week. And then, again, you can see this 26 here on the upside where this was Monday. We ripped into there, it got stuffed, and then we, went double distribution up on Monday. We talked on Tuesday morning about how they had, sellers had broken that down. You can see they offered that from below here, got the breakdown. We rally into it again yesterday. It gets stuffed. We rip through it again. And then, here we are with this sort of nasty overnight sell. But like, if you look on the 5, and I'll get there. Yeah, I'll just go to the 5. You look at the 5, like there's like not even a green candle on the way down, right? So to me, that type of structure can be easy to run back through. If bulls step in, and you can see that, we're kind of building volume here. And so, into the open, I feel like sellers really need to come in pretty quick here and stomp on this. And they're going to have to find some kind of a naked offer in one of these, random, low volume areas and just sort of stuff this back down and test the overnight low. Because otherwise, I do agree that, sitting above these 50s, 56, 75, 56, 80s, there's no damage done, really. And so I said last night, I'm basically bullish above. I was using 86 to 89 coming into the week. But it's, you could make an argument for 93. You could make an argument for, 80, 82. But generally in that area, bulls aren't in any trouble. So, we can continue to see rips sold. But if no damage is done on the downside, then, that's all it is. And, like I sort of led with this, maybe we just bear flag up another 150 handles or something like that, where everybody's, posting bear porn over the weekend about these gross looking flags. But we've seen them just continue to grind higher. So until we start really breaking down and making meaningful lower lows, I'm just planning for two-way trading today. And again, I'll probably focus on 57.26, certainly 57.50s, 54, I think I'm using today. Call it the overnight low to make it easy, which is right around 82. And really trying to avoid any kind of bias in the middle for sure.
Yeah, I think that's where the mistakes will be made right now, Farm, is like trying to gauge whether or not we're going to, when we're in the middle of this range, when I look at mine today, like around 57.13 area, that's kind of like my midday pivot, if we call it, like my middle, not my midday pivot, but my middle price pivot for today. That's where I see the chop and people just, over anticipating. I think that's probably one of the main mistakes that people probably make in this type of market is, I think we're going to 57.50. I'm going to start buying them here. And then they rip down 25 handles. They hold, they puke. They still hold our 57.80-ish area. And then next thing you know, they're right back up and they make a new high and then no one's long, right? or the vice versa.
Yeah.
I think we're going down. They get short. They rip up 30 handles. They don't, they and then they go up there. They make a high this morning, and then they come all the way back down to 56.80. I mean, I agree with you. That's where I see this tape potentially right now. I think it's, again, I go back to it. My mindset when I see this tape, going back to what I've seen over the years, you take your experience. The tape is trying to find momentum. The Bears have the momentum on the bigger picture now, because obviously for several weeks they've had the momentum, but they're fighting the way big picture of the Bulls. And it's like, okay, we're at this moment now where it's like, who is going to take us on this next leg? And I think that's the most difficult thing about this exact moment, but I think it's brewing. And I think the divergence that we've been talking about between NASDAQ and S&P and maybe Russell and Dow, maybe you and I take a look at these markets, when the indices, the indexes come together and they start to work together, that's the one day or the move where you just don't want to fade it. Because now if the divergence starts to remove itself and we start going, then we start to go. And then that's one where you hop on for the ride.
Yeah. Yeah, I think that's right. I actually pulled up the Dow, since you mentioned it. We had talked about it yesterday
Boomer.
briefly. Yeah. I love my boomer stocks, I'm telling you. I mean, some of them, you've got a great yield and, you could sell a little bit of vol against them. And then every once in a while, actually being long vol on them works fantastic because they have such a narrow, range and low volatility that if you can catch a breakout move on a boomer stock like MO, I mean, those premiums can absolutely go bonkers. So I actually really enjoy trading the boomer stocks. But we talked about it yesterday, and we talked about, this trailing week LVN here and in how I was expecting sellers to control that. We've got these single prints here on the 30-minute. This was from, last week. And you can see that we popped up in there on FOMC and it stuffed down pretty hard. And, now we've sort of crossed back, into the meat of, this week's distribution. But I mean, it's been kind of a choppy mess, right? Like some days, NQ looks like really promising. Like I'll pull that up actually, NQ intraday. But then just like overall, it just feels like it's struggling. But I mean, to me, like 19,700, I want to see hold on NQ. Actually, I was short NQ into the meeting yesterday. It was kind of, I was mostly out into the meeting yesterday, but it was a fun little short. But like it's to me, it's fine. Yeah, to me, it's fine above like 700s. But you probably don't want to see it kind of cross back down below 700s because then you're talking about, what day is today? Thursday, I guess. Then you're talking about Tuesday's range being at risk. And again, like to me, sort of the bottom of last week's meat right here, the bottom of this distribution. This was value area low. And then it also was Tuesday's low, basically right there. The bid was fantastic, I thought. Previously, even honestly, before we lost that spot, this was back when we were on March. So it was, 400s, I think, on March, and then like 260s was great. It ended up getting pulled, and then they got back on top of that bid. So like this is just a big spot to me. And I just don't know how ES can hold up if the Qs just completely poop the bed.
See, when I look at this chart, it looks bullish to me. It looks like they're trying to find a low.
It's
I mean,
fine.
the volume
It's
just
not
keeps
bad.
building. I mean, it doesn't look so bad. I mean, it's funny when you put a volume profile on there and you see, like, you just see the fight is there, and it just feels like we're trying to. It looks obviously as you scale it out, you start to feel a little bit more bearish. But if I just look at the last couple of sessions, I feel like, okay, if the Bulls can't do it today, they're in trouble. Again, I keep going
Yeah, I do
back to
think
it's
today.
like when we start making lows, it's weekends, man.
Yeah, no, for sure. I think today is definitely a big day, and the next few days are going to be big because the question I've been asking myself is like, have we tested it high enough to find those strong sellers, right? Because at some point it's coming. Like, I mean, I promise you that at some point it's coming. We're going to test high enough where we're going to find some serious sellers. And maybe I'll flip back to ES again, June. I mean, to me, this was a big spot. Yesterday's high was sort of sniffing. And if you look at SPX, it's a big spot on SPX. And so, is that it? This prior swing low in here sort of sniffed that a little bit to me. 57.70, I'm sure everybody had on the chart, and like up to the 90s is where I start to get really concerned that maybe we have found those sellers. And if they're looking to jump the gun, and I mean, they're going to show up today and drive this through the overnight low, yesterday's low, test Tuesday's low. I mean, then it is what it is. You know what I mean? And like you're not going to be able to be long.
Yeah, again, I look at this from a volume profile standpoint, and I look at it like they have to build on this today. Today is just an important day for the market when I look at it from this perspective, because if it does make a new high, it goes back to what I said. I would not fade a rally, because if it starts to go, it's going to go, and if it starts to break, I would not fade a break. And so I think this overnight low is really key today, which we talked about, 8-day moving average. You've got, I've got a level there. You've got levels near there. Just looking at it, it's a day to really, Mira talked about this the other day. He goes, my edge is on the edges. He said that was one of his best quotes, and I agree with him. The keys for days like today is you really got to stay out of the middle, because the middle, I think, could swing too much. There's going to be too much move in a range where the price action just doesn't matter. Do you have like a range boxed out farm where you feel like it's just a no trade zone kind of area for coming in today?
Not really for today necessarily, but probably certainly 14 to 24 probably. I would like to see one or two things. I mean, because like this is going to be a range to trade, and then kind of some of this slop up there is going to be a range to trade. But to me, like 26 and above ish becomes easier to trade. And then sort of staying below, this volume, both, from yesterday and from today, this range can get easy to trade. You've got kind of like a Dollar General LVN here. It's like sort of like a cheap man's LVN here. That could be a little bit awkward intraday, but to me, like, I'm looking to see if sellers are going to cap this and we're going to find some rotation in here early in the day and we can fade edges here, or are we just going to open and, just rip this higher? And to me, like 26, I really feel like whoever controls 26 out of this week is going to be in charge next week. I think it's so important for bulls to control that from above. Do you remember, I'm trying to remember what month it was. It was way back where we had like 5 daily lows at 57, between 57.24 and 57.26. This was like back last year in, I don't know, July or whatever it was. It was the most obnoxious level I've ever seen in my life. And I was so mad because I wanted them taken out because it was such a terrible low. I mean, it's right at the same spot. Even with the contract roll, it's still right there. So to me, in that range, mid 57.20s is going to be for like all the marbles. So, I'll play this range if this is how we open. I'll consider that. And I'm going to be watching 57.20s really closely. Today seems like a good day to get chopped up, honestly, because like I said, bulls are fine above that overnight low. But sellers clearly aren't in any trouble, at least from overnight, until we break away from this volume here. And I do think this could potentially retrace quickly if we don't find some kind of a naked offer in here. You had the IB high from yesterday, was right around 57.14. So like to me, something like that, break above there, and you're probably going to start retracing some of this move, at least up here. So, we'll see. This open could do anything today. Given that context, holding the 56.80s, but sitting capped under 57.20s. So I definitely don't want strong bias in that range.
Yeah. No, it's going to be slippery. I want to go to my charts for a second, guys, if we can. I want to talk about something that I think is pretty important. In my thinking right now is obviously it all starts with a daily for me. I start off with that little bit of a bullish bias, as I've discussed. Then I go to the 60-minute in the S&P, and then I start going down across the other markets. And I want to see if there's divergence, if there's unity. Is everyone working together on the indexes? or not. And so we started off with the S&P. I talked about this range again, and I talked about 57.50 today to, let's call it 56.75 to 56.80. This looked to me in the overnight. I see it. It's clear to me. This is I highlighted this range. This is where I think I want to be long near the bottom. If I wanted to, I'd be short near the top. I'm not looking to be short there because the daily supersedes it. But in the case of just that would be something I would look at. Even I'd be a seller there if I was long, because I don't know that they've necessarily pushed there, but I wouldn't be a short. But that's the range I see. When I go to the NASDAQ, does it look similar? No, not on my indicators. It looks different. Do I go to the Russell? No. Again, looks different. When I go to the Dow right now looks almost identical to the S&P. So you go S&P, Dow. Charts look the same. And so why that matters to me is because the fact that the S&P is really only working with the Dow right now when you have this divergence with NASDAQ and Russell, it's hard to gain any momentum, right? I mean, if the NASDAQ today just decides to ripper higher or ripper lower and the Russell follows, and I see that the Dow and S&P are getting in unison with them, then we get the potential for a good move. If I see divergence right out of the gates today and S&P is in this range that I talked about, we're going to get pushed and pulled all day. It's going to be like Top Gun when he goes, I'm going to spin you, I'm going to turn you, you know what I mean? And you know when they talk about that in the movie, Boomer movie.
Yep.
Yeah, that's what I see. I think that it's going to be like that. And so you just have to really be patient. Today's a day. Let the day set up. Stick to your bigger picture bias. Look to see if there's divergence in the tape. If the tape starts to work together across the indexes and across the board, then you might have some clarity of direction. And that's a trade you could stick your teeth into, because I do think the market wants to find momentum again. And I think that's just the theme.
Yeah, I think that's right. I mean, and to that point, I mean, we have time frames are in conflict right now, right? I mean, bulls have been in somewhat short-term control, higher time frame, sellers have been in control. We have indices somewhat in conflict, not behaving together. So yeah, this is a recipe to get chopped up to me, especially if you're looking for, follow through on every single trade that you try to take. And so, there's times to press the gas and times to just sort of scoop a few handles. And to me, this is probably the time to scoop a few handles. I mean, I've been having overmanaged swings through all of this because we keep selling these pops. I've got just, some individual holdings, that we've been holding in the room, and then, hedging the highs and then peeling off those hedges at the lows. And it's just been a huge pain. And so I would love to see some clean trend, but right now there's just conflict. So for me, swings is just real careful, and then just scoop a few handles on those day trades if you can.
Yeah, for the real short-term scalpers, you guys might like these types of days. Just make sure you have confirmation, small and smart. It's all it comes down to. Be small, be smart. All right, Farm. It's about that time. Traders, get ready for the Tanya Army. Get ready. I better see those thumbs up for Tanya and for Farm. Farm, I love you. You're the best. Thumbs up for Farm. Thumbs up for Tanya as she's getting ready to come on at the 9 o'clock hour, which is after we take a quick break here. And then we've got PAX in studio. Tanya will be done with us for the week, which we absolutely loved. And then we go to having PAX in studio. And then my boy, Trading Boxes. Some of you may not be familiar with him. Christian, he was on Chat with Traders. Love him. He's great. Stay tuned. We'll be right back with Tanya.
Pulse, the latest innovation in real-time market sentiment analysis, exclusively from NinjaTrader. With Pulse, you can see in real time how traders are positioned across key futures markets, including the E-mini and micro S&P 500, the E-mini and micro NASDAQ 100, the standard and micro crude oil, and standard and micro gold. Each symbol has its own visual gauge, showing the percentage of NinjaTrader users holding long and short positions. In addition, Pulse displays the average entry prices for aggregated long and short positions. The needle on each gauge also marks the extremes achieved during the trading session. Available on both NinjaTrader web and desktop platforms, this powerful tool allows you to measure market sentiment with data derived from our own customers' trading activity, tracked anonymously to protect trader privacy. Now you have your finger on the pulse of a bit of real-time market sentiment data, giving you unique insights to help make better, more informed trading decisions. Pulse is live now on the NinjaTrader web platform in sim mode and will be coming soon to our desktop platform. Take control of your trading today with Pulse, exclusively on NinjaTrader.
Experience the all-new NinjaTrader mobile app. We listened to your feedback and designed it with the power and simplicity a modern futures trader needs while on the go. Analyze trends like never before with automatic y-axis scaling and over 40 built-in and hundreds of downloadable indicators. Execute trades confidently with the redesigned Superdome, optimized for precision and speed. Make informed decisions with real-time insights into how market movements may affect your portfolio. Monitor and manage your trades either at home or on the go. Available now in the App Store and Google Play.
Welcome back, traders. Our last session with Tanya in Naples, of course, not for the long term. This is just the beginning of our relationship on NinjaTrader Live. Before we get into your charts, I just have to say it's been such a pleasure to be able to meet you this week. It's been so much fun. I had a ton of fun with you and Pax yesterday. I thought that was great.
Yeah, definitely. The panel yesterday was great. I think you guys should like clip that and make that its own video because there's a lot of value there from his stories and wisdom. And like, I can't wait to hear more about that tonight from you guys.
Yeah, we're going to dinner tonight.
Yeah,
we're going to dinner in Naples. And I think you and Pax for future segments is going to be really, really fun. So we'll definitely make that happen. But yeah, so last segment for the week. We've been through a lot this week, Tanya, right? We've been through first day of the network, rollover, FOMC, everything. And you've handled yourself like you always do. Clarity, everything that we're looking at, we comprehensive. Let's take a look at what you're looking at for today.
that sounds good. So, I'm always just starting off on the daily chart. And so far, I mean, right now, ES and NQ are both inside yesterday's range. It's a little bit tough. We talked about that pre-market drop. So NQ has already moved a good amount on the daily here. 350 points already today. So just like Farm said, I'm preparing myself for some more range-bound action because that's just been the name of the game recently. I know I still have this divergence here at the lows, and that's essentially where the bulls have to hold that up for any more momentum back up to the upside. But I did note, like I said yesterday, ES took out that Monday high and NQ did not. So NQ is quite weak there. So let's move over to the 4-hour. Right. So on the 4 hours, that's what I'm talking about. So we had made a lower high here on NQ, while ES is a bit stronger. I mean, today, like I said, we took out all that FOMC upside here pre-market. However, we're still not closing above or below any short-term highs or lows with displacements. That's basically what I note for any continuation or reversals. Like, for example, here, we couldn't close above this high. We just wicked it and we came back into the range again. So, and same thing here, right? We've been wicking and coming back into the range, wicking back into the range. So I'm preparing myself for some more range-bound action. Let's go now to the hourly. But like I said here, even though this on NQ and ES, we couldn't take out this high in the NASDAQ, I'm noting here on the hourly, like you guys talked about, we've been holding this 5680s area on ES quite well. And I did make a note of how this didn't break yet. Like on ES, there's a small divergence there on NASDAQ and ES where that's short-term low. And also, again, like I've been saying, like we've been wicking it. There's been no closures below. So, and this tiny little FEG held true. So I'm kind of just anticipating a potential just retracement back into 50% of this range from here to here. And unless we start breaking lower, if we break this with a displacement, I'll be looking for like 5650s, 5640s on ES. And then potentially, last week's low on NQ. But that's a big if. We've been not having much momentum to the upside or the downside this week, right? This week we are having, like if I go to the weekly chart, we're having an inside week. ES, and we're pretty much near the open. I mean, we're like 10 points above the open of the weekly candle right now. And on NQ. So I mean, it's not really like it's been a super clean week to be trading because we had, again, rollover and FOMC. I'm hoping, like we talked about, maybe we'll get some cleaner action now heading into the later half of the week. But I'm not going to be holding my breath for it, and I'm not going to be really, like I said, if I'm seeing a wick below and like the extreme of the range, I'm not going to be looking for a continuation lower then. I'm going to be probably looking for a reversal back into 50% of the range. I'll be choosing my spots pretty wisely. And let's see here. We just want to see here. Yeah, I also don't love it when, like I talked about, I don't really love it when we have such a huge drop during London session pre-market, because then, that was just distribution to the downside. We could have more accumulation during the New York Open. Like that's kind of been the theme of the New York Open for this week, I would say. So I'm keeping my expectations lower for the range of the day because just the nature of it. But like I'm keeping in mind, we just took out all of the FOMC upside. So if we're getting more continuation to the downside, I'm definitely not going to be trying to be a contrarian there. I'm not going to be trying to long like you talked about. If we break 50, what was it on ES? 50 right here. Yeah, 5680s, which we are starting to go lower here before the open. We'll see how this area holds up. But yeah, I'm not going to be trying to be a contrarian and trying to long up to the upside. I do see the bearish side where, like I talked about, that divergence between ES and NQ on the upside, as well as I'm looking at the daily or like the 4 hour. Actually, the 4 hours better here. On ES, you have 3 drives up into this imbalance. You have 1, 2, 3. All of them are quite weak. That could be the potential start of that move lower. Right here on NASDAQ, we didn't make a new high there on the week yesterday. So, and also I'm keeping in mind that if I'm going to take longs, I'll probably long ES. And then if I take shorts, I'll short NASDAQ. Like I don't want to be, I'll be longing the stronger pair and I'll short the weaker pair.
Bingo.
But yeah, if I'm in an ES long and then I take a look over at NASDAQ and it's making new lows on the session, I'm going to be very strict and careful with my positions because, if the NASDAQ's not holding up, it's going to drag ES down with it. But yeah, that's basically my game plan today. If we hold these pre-market lows essentially on ES and NQ, then I'll be looking for more upside. But if we start breaking down, there's more to go on the daily. Yeah, so it's pretty simple, I would say. I'm not going to be like I talked about, like how you talked about also later. Don't diddle in the middle is what people like to say, right? Like
Yeah.
you want to be playing at the extremes of the ranges, especially if you're not anticipating such a large move. But that being said, on Thursday, like if we're going lower, I'm going to be looking for more downside. If we're displacing below these lows, I'll be trusting that. But if we just wick and we hold up and we start wicking, let's say this high and then coming back, like I don't really want to get myself involved too much in this range. If we come back above on the hourly, like honestly, we have similar levels, but like, yeah, if we come back to 57.50s here, I do think, we can hold up and go towards the 5,800 level here, like on ES, because that would pretty much invalidate this move lower, and then we could potentially have that grind up higher like we talked about. But yeah, today's Thursday. I'm not going to be too biased on either side. I'll let structure dictate what happens. I don't really love it when we start having divergences on the lows and then the highs, and then, well, now we're having divergence on the low again. So that's what I'm really watching here. Are we going to hold up this pre-market low on ES and NQ? I think that will really tell the tale. And I feel like we'll know pretty quickly. I mean, I think in the first 15 minutes of the day, I want to know. I want to see how that candle goes. If we're just wicking it and coming back up, then I'm not going to be looking for more downside. And I'm not going to be pressing shorts here, especially with these equal highs here on NASDAQ. And like, let's say we wick this and we come back up into the range. I won't be trying to press shorts there and because there are equal highs here and there's still liquidity void above. So I don't want to be pressing hard each way. Yeah.
Yeah, I think the theme I take from all of us today is the overnight low is important.
Yeah.
Right? Really important. If it goes through with momentum, no one wants to fade it. Like,
yeah.
And I think the world sees that just because coming off a Fed day, you take out the prior day low now, today, the Fed day low, hard to buy there.
It's hard. Yeah. If you're thinking about the psychology, like no one wants to buy that really.
Yeah.
And everyone's, they'd rather get out of their positions. Everyone that was long from yesterday, they just opened up new positions yesterday and they already read. Like, why would they stick around that trade,
Yeah. And then the flip side is if we hold the overnight low and like you said, if we wick it where they just blip down there, hold it, or even if they took it out by a few ticks and then rip back in it, then all of a sudden you're like, okay, then it becomes really hard to be short and it's probably a grinder ups, to the upside. And then next thing you know, don't get caught trading the middle too much over anticipating it because it could take till the close. It could take time. It's about just being small. And then, I think overall this market today, the edges are the key for me. You're right. I mean, stay out of the middle.
Yeah.
Watch the lows, see how they react. If they hold or don't hold, that'll tell a lot of the story. And I believe you're right. I believe we're going to know pretty much right out of the gates today. Yeah. Like either they're going to go take out this overnight low in ES and NASDAQ, or they're going to just blip down their hold. And then if they do, then they start to rally. That's what I see.
I agree, especially since we're like heading towards that level right now. We're going to know pretty quickly, I think, what the tone of the day is going to be set at. Could be a really quick morning, potentially, if we start seeing momentum to the downside.
Oh, yeah.
And I'm keeping that in mind, and I'm sort of framing my mindset in that way. Got to be quick with it.
And I know you don't watch the bond market, but the 10-year keeps making highs, and it's kind of an interesting
kind of risk-off scenario.
Yeah, and it's, the data today wasn't that big of a deal with jobless claims. We didn't move on it. We said the 10 a.m. data, that could be a market mover. Again, it's not necessarily
I think so, yeah.
Right?
Yeah.
It's not necessarily the data sometimes. Sometimes the market just wants the data to come out. It looks for something and it pins to it. And everyone's like, oh, it's the homeless or the jobless or whatever.
No, it's like that was already planned out,
Correct.
Right? They were just looking for some kind of headline to use it for. I agree.
Yeah.
I think it could be a quick open. And if that happens, then I'd be ready. Yeah. Other than that, if it's not a quick open, if we just wick and return, then I'll wait for 10 a.m. data and then wait for the next setup after that.
Cool.
Yeah.
Yeah. So you're headed out after this. Then we're going to see you tonight for dinner. What do you have in store for Naples during the day today? You've had like a lot of adventures.
What do I have in store? What did you say to go to some museum? I like museums. Art.
Yeah. Artists, art is. I never get it
Maybe
right.
I'll
It's
do
supposed to be
that.
art is, and then people call it artiste, but it's not. It's artists or artists. I don't know.
Okay. Maybe I'll head over and do that. Yesterday was definitely a long day for me. Traded post FOMC also. I ended up just taking a break-even trade because I was a little bit late to the longs, and then that's it, and that's fine. Actually, my last 3 trades this week have been break-even. So that's kind of funny. I took four trades. The first one was a small loss, and then the last 3 were break-even. So that kind of speaks to the range-bound market because I'm not really such a range-bound trader. I'm going to be looking for continuations or reversals. And yeah, I'm so excited to see, are we going to break out of it today? I'd be ready. Yeah.
Yep.
Other than that, kind of just waiting for some better opportunities.
Yep. Well, it's been an absolute pleasure having you here. We look forward to your morning segments going forward. Tanya Army, give her the thumbs up on YouTube. She had such a great week with us, and it's not done yet. We've got dinner tonight. And then I know you'll be tuning in today at 11 o'clock when I'm speaking with
the CEO of NinjaTrader.
Yeah, we're going to be talking about what happened between Kraken and Ninja. So all the rumors,
everyone's talking about it.
Everyone's talking about it. They want to know what really happened and how it impacts everybody. They got to stay tuned at 11 o'clock. So, but before that, we've got Pax coming into the studio into your seat after this. So he and I are going to be on with Christian trading boxes. Do you know Christian at all?
No, actually. So I'll be interested in seeing his live trading later.
Great guy. Love his style. Fits in with this group. He's just really a great guy. And I'm really excited for the NinjaTrader network to see what he's all about today. And so Pax and I will spend some time with him, and then we'll let him go to streaming. But it's about that time, Tanya. Thank you again. I'm going to take it over to Jim Cagnina now, and then he's going to bring in Christian, and then I'll be back in studio with Pax.
All right. We have with us Christian Carreon. Christian, how are you?
Hey, Jim, I'm good. How are you guys?
How'd I do on the last name? Did I say it right?
It's Carreon. Like carry-on luggage.
I messed it up. Sorry about that. This is the first time we met, I think, right?
It is. Yeah. We haven't had a call, really.
Yeah, but I've been following your trading boxes on X and all the good work you're doing. It's pretty exciting.
Thank you. Yeah, I'm excited to share a little bit more about that.
Yeah, so I read your bio, man. You're a warrior. That's all I'm going to say. Your bio is crazy. I'm like, wow, this cat is the toughest guy I've ever saw. It's testament to you, man.
Thank you. Yeah, I've been through a lot. I've been through 2 kidneys to get to this point. Wow.
Well, you look great. You sound great. Your work is great. How did you get into this business to begin with? We're gonna learn a little bit about you right now.
Yeah, so I'll sort of, I've been through a lot, but I'll summarize it as best as possible. I got into it because my kidneys failed. My parents were low income. This was right before 2008. So all the money that my parents had saved went towards trying to save my life because earlier my younger sister had developed kidney failure and she ended up passing away. So, when that happened to me, it was like, oh gosh, can we possibly lose him as well? And so my parents did everything they could to try and keep me alive. So we did everything we could. 2008 happened. My parents had no more money left. My mom was a match and she was able to give me one of her kidneys. And after a year of dialysis and going through all that challenge, and then 2008 happened, my parents lost the businesses. We had, very little, no income. We all dealt with our depressions through different ways. It was just a tough time overall. And I realized during that period that, my mom she had a small hair salon and she couldn't keep her clients because she had to drive me down to the clinic down at UCLA to sort of help me get dialysis and prep me up for the transplant. And so during this whole time, I realized, hey, I need residual income, or what I thought back then was residual income to come in order for any sickness that I go through again in the future, or if my parents get sick in the future and I don't have the means to help them out, like the residual income or the passive income, sorry, both can really help me and my family stay afloat and really go through that hardship, together. Fast forward, I said, okay, I need to learn finance. I need to learn how to make money. I started trading stocks. I lost, a lot of money like everybody did in the beginning, but the hardships and the pain of what I went through was so much greater than the money that I was losing. And I was working at a restaurant and I was just collecting tips and putting them into the accounts and trading them. Eventually, I lost a lot of money. I made some money. I got into the industry. I have an institutional background. I was a financial advisor, financial planner. I moved around from shops here in LA. And as I developed the strategy, I started swing trading. I managed money through that approach. And it really led me up to this point. And the pain of seeing, my mom lose her clients and her business because she couldn't attend to them. And then myself, I couldn't really hold the job because I had dialysis 3 times a week, 4 hours every time. That commute from where I was to UCLA to an hour and a half each way. So that's a full 8-hour shift for people. So I said, okay, what can I do so I can keep a job or collect income since I can't keep a job? But, that's pretty much summarizes it. I went through a lot of hardships. Just 2 years ago, my health sort of deteriorated as well. Kidneys usually don't last long because the medicine you take does impact the kidney and does damage it as well. So just 2 years ago, I went through that same struggle. My kidney ended up failing. I did dialysis, very short, but I ended up going through another kidney transplant. And that is what really changed things around again for me almost 16 years after the first one. But in this time, we were in different positions. I was doing well with this. I was managing money, and it was a smoother process than the last time. That pretty much summarizes what what got me here.
It's incredible. I mean, you're the definition of perseverance. You really are.
Thank you.
And I might tear up a little bit here. And what a great family. What a great family. Wow.
Yeah. We've gone through a lot to get together to this point, individually and as a family. And in order to really get to where we are and be as healed as possible, it's still not completely there, but it's a work in progress.
So trading wise, what's your favorite markets to look at?
ES and NQ for futures, and then swing trading, just, mostly tech stocks.
Okay. And so when you swing trade, you'll take a position for what, couple days, couple weeks, forever?
Well, it's a if then else scenario. That's pretty much my whole approach. If these individual stocks or ES or NQ does this, then it's my job to do what my strategy tells me to do, or else I sort of wait. If I'm in a trade and it stops me out, I'm a trend follower, so I'm looking to participate in trends. If the trend does not give birth, right, then I take a stop and I exit, and then I wait again for the environment to change or for another opportunity, another entry requirement to be met to go ahead and enter.
Yeah, got it. That's awesome, man. All right, well, I'm looking forward to watching you now. I'm going to shoot you back over to Delhi, and really great meeting you, man. Really good.
Likewise, Jen. Thank you so much. Thanks. Enjoy your day.
My boy trading boxes. Yeah, it's so funny. We call people by their Twitter handles,
Yeah.
And your name is Christian, but Chris, but I call you trading boxes because your style and your Twitter handle. And I'm really excited to have you here today. First of all, have you met Pax before?
No, in a rehearsal, but hey, Pax. I mean, both of you guys look great. I'm trying to get my hair going on. Maybe a competition.
Oh, this is old school Chicago here, buddy. This has been bred into us. This is old school Chicago right here, man.
It's all in the water. Hey, Christian, your story, I was sitting here listening, getting ready for the segment. Thank you for sharing that. That's a phenomenal story. Painful, difficult, but I think that's I don't know how to say this the right way, but the struggle that you've been through with your family, your health, and all of that, that's what I believe that struggle is what truly is the breeding ground for making great traders. So, you paid attention to your struggle. You didn't just blow it off. You felt the stirrings in your soul and your spirit, and you grew through it, and you walked through it, and you struggled through it, and you picked one foot up in front of the other when they felt like they weighed 500 pounds and stuck in mud, and still did it. And that truly is what forges great traders. So thank you for sharing that.
Of course, and thank
Yeah,
you
it's
for
great. I'm so
saying
glad
that
for-
as well. It's a
Yeah, it's so
journey,
great
and
to have you guys meet.
yeah, it's a journey. It's that discipline of like, as you guys know, right? We can all connect through our health. The discipline of creating the right habits, the right lifestyle, the right diet is what really transfers on to this and makes the process a little bit easier.
I cannot stress the importance of that enough. I just can't stress that enough. With my own health issues, or just the own issues that we all struggle with in life, all of us do, right? I think too many of us come to this business thinking that it's all about numbers and it's all about math, or it's all about the charts, or it's all about a process, and that's all true. It is about those things. But man alive, it's so much more than that. It's about our spiritual health, our physical health, our emotional health, and maintaining those. And that is the struggle. That's one of the, there's a few lines that I've lifted from Anthony. Trading is a journey of oneself.
That's the name of my upcoming book too, by the way.
And it's the truth.
Yeah.
And the second one is, the trading, for me, my stats don't matter. How I increase my size, decrease my size, and decide not to trade does. So go big, go small, or not at all. That's another Anthony line. But anyway, so trading is a true journey. It really is. And it's not, it's not a straight line. Boy, oh boy, I wish it was. We'd all be billionaires. All of us would be, we'd all have 100 million in the bank. I certainly would.
Yeah.
I was on my way to it, and then life got in the way, and I didn't have the tools to be able to deal with that. When life decided to pop up and the Great Recession happened and businesses failed and all that other stuff happens, unless you've got the emotional, spiritual, and physical tools to deal with it, you're in trouble. Anthony and I were talking about this last night after a workout and dinner. I cannot, and I've tweeted about this a million times, I can't tell you the amount of traders that both of us knew that have died young. And most of them broke. And I mean great traders, rich, wealthy people. When life changes, businesses change, the world changes, all of a sudden things go away and our physical health dies and our spiritual health dies. I can't stress the importance of embarking upon that journey. I don't want to sound like a psychology class, but of self-actualization, really, really, really every day. That's one of the reasons why I started to pray the rosary consistently, on Twitter. And is because I can't stress the importance of not being Catholic, although that's important for me, but living your faith, finding faith, believing in something greater than you, no matter what that is, even if it ends up, being, your family. Believe in something greater than you, something rooted in love. And that'll keep you grounded, right? That'll keep us moving forward. And that'll keep us alive. What kept me alive after I finally went completely broke, 2011 and 12 after MF Global, what kept me alive was the little bit of faith that I had left. I had a big crisis of faith in God, but what kept me alive was the love that Jen had for me, my wife, and the love, I've got 5 kids, and the fact that my kids loved me and saw things in me that maybe at that time I wasn't able to see myself. And that kept me alive. Not only did that keep me alive, but it kept me moving forward. Like I heard you describe with your family, keeping you moving forward when things get tough, man. In this business, I don't care who you are and how rich you are. It will get tough.
You and I we could talk about this all day. We're going to spend the first 30 minutes or so. Look at this is why. So people go, when is PAX going to be on? When is PAX going to be on? I go, I gave him the whole first hour on Friday. I won't even be on there. I just hand him the mic and go at it, my brother. Listen, don't get in the way of it, man. It's a momentum thing with PAX. He's like the market. When he gets going, let him roll. Christian, we've got your charts up here today. What I'm excited about today, too, obviously, I wanted you two guys to meet, and I think that getting Christian into the Ninja family, into our family, because he's such a good guy. I've had a chance to speak with him a lot. I was so excited that he decided to join up and start streaming on NinjaTrader Live with us. But I want you to see his talent as a trader as well. And so, Christian, today you're leading the charge with us. What I want you to do is, take us through kind of your morning prep routine. You've heard everybody else's. I want you to take us through this. Pax and I are going to stay on with you for a little bit, probably till the 10 a.m. number, and then we're going to let you stream that 10 to 11 hour without us, because otherwise, me and Pax, we'll go on these tangents, and I want you to be focused. But take us through the charts, my brother.
Yeah, so these are, I'm a very strong believer in support and demand zones, or support and resistance zones, and I've colored them this way. These are hourly zones, what I consider hourly zones. They sort of create the short-term or the intraday environment. For example, we've all been talking about this 5690 sort of area, right? Maybe a little bit different. Maybe somebody has the low, the London low, or this exact zone like I do at 5693. But to me, it's a strong area of support that if we can continue to hold, we can look for, and the market's opening here, and as it looks like we are trying to break it, we need to form acceptance to break this. But while we do that, let me go ahead and share, sort of my top to down process to help really create these the plan for today. So I usually start with the daily, and let me bring that over here. I do have that plan on trading view, so I'll just share a quick screenshot here.
Taking down these morning lows already, Pax. They're heading there.
Where's it at?
87.
Oh, yeah.
Yeah, it looks like
That's
we're
it.
trying to
57.7 is
break.
going to be high.
As we've talked about this morning a lot, it's about staying patient on this open. So here's your daily chart, Christian.
This is the 4 hour. The daily is a little bit too clouded, so I want to show this. So, I heard a lot of the discussions that you guys were having where, it's a two-way tape. Absolutely agree. From a sort of larger time frame or trends perspective, we really don't have confirmation of sellers stepping back in yet. We are possibly seeing that today. But if you look back into Thursday, we had that failed breakdown right here that triggered this push higher. And then the move back into the 5660s was our first sort of higher low. That needed to hold in order to be able to push price back up, or a break back lower. Then we sort of had confirmation that, hey, this initial bounce was short-lived and we weren't going to see another push higher. So eventually we held. And the idea for yesterday was, as long as we can continue to hold this, we can push back up into 5718, which is another resistance zone that I have. If we break that and this sort of large downtrend line that we've been respecting, we can go ahead and push into prior month's highs and into the next zone. So the idea for today is, okay, we've sort of had that scenario play out. If price can pull back and hold the 5718, 5720 area, which was our resistance yesterday, pre-FOMC, right? It sort of broke out, tested it again right at when the rate decision was shared, and then we broke above it. So that's our first area of support that we want to see hold. It would also align with a 4 hour 9 MA higher high, higher low structure, which I also, my main process is environment, trend, and setup. I need to have all of those align. The environment is, of course, the daily, the sellers are in control. However, we do have the counterparty, the buyers, sort of stepping in to see how far we can push price higher. So the environment is short-term uptrend versus a larger downtrend. The 4 hour is confirming that bounce, right, via the hourly higher highs, higher lows trend structure. So you have trend confirming the sort of small change in environment that you currently have, And then, of course, the setups is where the intraday trading takes place. But today, the 4-hour structure was saying, okay, if we can sort of come back into this breakout area from yesterday, we can hold here, which is that 90, 85 sort of area, and then push back out and reclaim that 57.18, 57 sort of 20 area. And if we can do that, push back up to highs. I know you guys were discussing the 57.50s and London highs, maybe prior day highs. And you can see we're already bouncing a little bit from this. If we were to fail this sort of yesterday's breakout, then we can start to look for that push back down. So that sort of gives you a larger time frame structure to give you an idea of, hey, what is it that we're sort of seeing now? So now I'll bring in the daily plan that I create for ES and NQ, and it's the hourly structure now. So as we sort of identify the larger time frame environment, the 4-hour structure that is sort of the confirming the leading trend, right? We then look to go into the hourly to say, okay, on the hourly and these hourly zones, where can we sort of say we have a line in the sand to look for a bullish, right, bull bear scenario? What then does the trend structure in that hourly environment tell us? So a little sort of quick lesson here. Every time we create a sort of wedge or a box, breakout or range, whatever you want to call it, I call myself trading boxes because I come from a swing trading background. And I noticed that prices would contract, consolidate, create a box, and then we get a breakout, right? So I was always looking for these boxes or these ranges to participate in a trend. When you get a range breakout or a box, you then create a higher high, higher low structure. That is what a trend is in an uptrend, right? In a downtrend, it's a lower low, lower high. And so as long as this higher high, higher low structure against the 9MA holds, then you sort of have an idea of where the momentum is for that day. Yesterday, we had a huge breakout and continuation, and we were sort of in that hourly 9MA trend. When the higher high, higher low structure ends, and we then revert back into the mean, which ends up being sort of the 2050 EMA area, which I have shaded here in green. As you can see here on Ninja, on 5-minute, I've sort of replicated that chart. If this fails to hold, then you're sort of confirming a range-bound structure where we wanted the 57.18 area to hold. If not, we move down into the 56.93, sort of back test this prior range, right? So that's sort of your bull-bear zone for the day. Bullish, if it holds, then we can continue higher, and then bearish if we break below it, find acceptance, and break lower. The scenarios that I have drawn here are just that. If we were to hold this 56.93, right, it's always the if then else scenario for me. If we were to hold that, we can attempt to push back up into yesterday's resistance, that 57.18 zone. If we are to be in some sort of range-bound structure where we have data in 30 minutes or so, then we'll probably find resistance there. At the same time, we will be creating a lower low, lower high, and a rejection. So if you have that idea to say, okay, we can find resistance at that lower high, we are sort of confirming a range-bound tiny structure, then the 9MA should act as resistance, or 57.18, right? It's just it's sort of confluence of those two, the MA, the moving average being a moving resistance, and then the zone being an exact interaction that price had with this level back in time. So if it does fail to reclaim 57.18, then scenario 1 for me is range-bound structure. If we find acceptance, which is a consolidation that signals you that sellers are not able to drive or push price back down, and then you sort of have this sort of ping pong right at that zone, that's acceptance. If it's able to hold that, then we can look for continuation back up. It confirms that buyers do remain in control, that this overnight sell-off was maybe just that, and we can sort of push back up higher. And of course, you can imagine if we hold the London highs, prior day highs, then we can attempt that push back up higher towards a main target that I have here in 58.30s, 58.40s. If the 57.90s fail to hold, then we start a breakdown lower into, I think you guys also talked about this, that prior day low, 56.50s. I have 56.43 as a strong zone, where then I would look for I would expect a bounce, maybe just relief bounce, but there should be some reaction there because of this prior consolidation here that we have until we form acceptance and we have confirmation, right, from participants telling us, hey, this bounce attempt is probably going to fail and sellers are going to step down from here. They step down here and they'll probably step down here again and drive price lower. We need to see that. We don't have that data yet, so we can't sort of say, okay, this is what's to be expected. By looking at this hourly candle and this initial reaction, to me, it looks like we're getting a failed breakdown of this 56.93, 56.85 sort of area. And as long as we can now hold this hourly candle low, I would expect for the push back into that 57.18, 57.20 area to sort of happen. I won't go into it all for NQ here, but it's sort of the same idea. We're sort of back testing this range breakout. You can see that right after the FOMC, we back tested it and pushed that higher. That's confirmation to tell you who's in control. And so what I typically do is I look for my 5-minute or 2-minute entry models into that reversal to participate in this breakout. And here, into the open, I probably would have been looking for a reversal long on a failed breakdown, and then look to target yesterday's resistance, which for NQ is 920. For ES, it's 5720, and then reevaluate and say, okay, are we going to accept it and push out higher, or do we find resistance and reject? Those are pretty much the scenarios. So let me put this away. And it's sort of a top to bottom approach every single day, because that helps me sort of keep aligned with the overall trend structure. I know sort of what to expect on a daily and weekly time frame. If we're bouncing, if we found a sustainable low on the daily, then I know that we're probably going to have a 3, 4, maybe 5% bounce, especially with the kind of drop that we've had. And I then need to align myself with now the multi-time frame structures in order to be in alignment with the trend, right? Because I am a trend follower. That doesn't mean that I won't buy the edge or support, because what I'll be looking to do then at this point is get long a mean reversion setup that I have, which will then allow me to participate on a move back up from sort of here to here, right? And that's sort of the structure that I look to plan, the process that I look to do every day on a daily basis. It helps me stay aligned. And then I show up, I sort of create the trades that the trade ideas that I have for the day. Like one trade idea would have been to get long my mean reversion model here on this sort of reversal, which this has a perfect structure for me. We do not make new lows, so we don't have a divergence. However, we do have a divergence from, let me draw this, and with delta, or not delta, sorry, RSI. I do look at both delta and RSI for divergences into sort of, if we sort of break it down into, let me see if I can find the drawing tool.
So that 93 was an important area this morning, and now we're seeing, basically, we talked about this earlier. We went down, we didn't make a new low in S&P, and now we're pushing higher. What is this telling you for today?
It wants to backtest that 57.20 or 57. I have a 57.18, but it's pretty much yesterday's resistance. In the morning, we backtested that 57.93 and at the pre FOMC, and then found a little bit of acceptance consolidation at 57.20, and that led to that breakout higher. So as long as we hold 93, we can expect a push back up to 18, unless this bounce fails, and then we sort of get a little bit more confirmation that sellers want to step down from the overnight highs back down to here, and then we push lower. Let me see if there's any comments.
Pax, you know what the opening range was today? What's
Yeah.
been going on with that?
I was just looking at it. The top of the opening range is 92.25, and the low is 56.86. So we've come out of the opening range a couple of times, I think twice, as far as I can see, and ran up to what I call the pay lines at 96.25, which is where we remove our risk. So you buy 92 quarters, you sell a quarter of a unit, 96 quarter, and then we wait. What's the high so far? Is it still like 57.04?
We're trading 10.
Oh, okay. So now it's rallying. So now you got to look for, so the first 15 handle rotation is already completed from 92 up to what? Oh, like 08. So now you're looking for another 15 handles, and that's going to take you up to that zone you were talking about, Christian, at 57.20 or a little bit further beyond it. So that whole level between 57.20 and 57.30 is going to be sticky and hairy. Going back to, I believe it's July 21st off the top of my head, 57.21 was the high that we broke from down to 51.20. So that was the all-time high for a while. And then when we took it out is when we rallied, I believe in November, we had like a quadruple bottom, 57.20, 57.30, 57.24, 57.35 in there. I believe it was November. And then we rallied and took out the old all-time high, made that high of 61.66 in December or in February that we broke from. So this whole area is going to be tough. And on the extreme should be 57.70, which is what we talked about yesterday before the number. I liked earlier what you guys were talking about and what Christian was saying too about today being kind of a rangy trade. You know, there's really no reason for us to break out of this range until after expiration, or maybe during, depending on what they want to do tomorrow with, in the expiration afternoon. But watching, I always enjoy listening to somebody like Christian, who I know has got something. You know, what are his trade thoughts? What's he seeing? What's he looking for? And how is he going to make that into an actionable plan? You know, so to me, it was great listening to you. A lot of information, but it was great listening, and I was able to follow along a little bit. I was looking away. I'm sorry. I was able to.
Yeah, no, Pax doesn't have his whole chart set up here, but
Yeah.
I think what's important, again, this is a big reason why we have you here, Christian, is talking about just, process and looking. I think like a day like today, we've talked about this. I think we're in this mode, and maybe we just have a general conversation about this, unless you have any trades that are coming up, of course, that will take precedent. I think this area right here is an area that's got to be worked out. I mean, obviously, Pax, because you're short-term opening range trade, I think obviously that's something that can be traded on a day like today. But we're in this middle area again, where my goal is having people like Christian, you, myself, keep people out of just churning the chop.
Yeah.
Because this is not a rally I think we can buy into, and I don't think it's it's not something I would look to sell into either at this point. No. So it's Christian, when you look at today's tape so far, what is the setup for any trade scenarios that you see with the action so far that's like where you feel you could stick your teeth into?
It's exactly what I was going to ask.
So I have a mean reversion setup or model where I look to take long the break of the last lower high that was made at the end of this downtrend, because what that signals is when we reclaim the last lower high of that downtrend, we're now technically in a higher high structure, right? We're now giving birth to an uptrend. So I did miss the exact break here as I was going over the plan, but if we can pull back into sort of that last, which is the 5-minute candle, 5-minute opening range, if we were to call it that, I'm looking for an entry if it can pull back there, and I'll have my stop down here at the lows, and I'll be looking for those resistance zones like I've shared. But my approach has me take half off at 1.5R so I can finance my risk in case that trade idea. So for example, we've talked about this 56.90 or sort of area. I need to take half off at 1.5R in order to finance my risk, because if it comes back down and fails, I still sort of pay myself lunch for opening up my capital to that risk, to that trade idea. Right. Of course, sometimes it might not hit 1.5R. Sometimes I'll look for a 2R exit instead of 1.5R. So I can really, depends on the day. But if it can come back down to that entry, I'm going to be looking to buy. I try and keep a 1% risk on all trades. So in this example, I have half of my of 1% for this account in order to help me keep that risk the same. And my job is to sort of compound that 1% over and over and over again, or 1R as I like to call it, and look for R multiples. And if I can make 20, 25, 30R a month, then that sort of creates good growth for my approach and what I look to do.
Did you so you have a bid work? Do you have a bid working right now? He and I
I
are just
do
looking at you,
at
so we can't see it.
5706.
So 5706 is the bid, and then the stop is below the low.
Yes, because if we come back down and we form acceptance and then push down to new lows, then we now have confirmation to me that price is going to want to break lower and go down to those lower side targets.
Where would you pay yourself at?
1.5R,
Great.
which I believe that's at 57.39, which is right under that next zone of resistance, which this should be red, but I look to take R multiples of my risk, and at 1.5R, I pay myself half, and then I'll if it can continue higher, I'll let the rest go on into other R multiple targets that I have in place.
Got it.
I think you might get those. Again, I look at this area and I just feel like it's going to be. Yeah, I think it's going to be choppy. But from what I saw this morning on the low, I do feel like it's a pretty good low though now.
Sure.
Right?
Yeah. Well, the low of the day was made in the opening range, and that's almost always a trend day.
Yeah.
So maybe the market tries to reclaim the 5730, or 3039 area that you're looking at, and get above that and retest that 5770 level we talked about yesterday. But don't forget the 200-day moving average, the simple moving average, comes in at like 5779. I could be off by a point or two, but I think it's up 79 or 80. I'm doing all of this off of memory, Christian. So if I'm wrong, by
that's
a point
great.
Or two, just
Yeah, so we're holding.
Yeah, he and I are in studio right now, and we've got you on the big screen, so I'm not looking at my normal, I have some charts up here. I just couldn't see what you were doing, so just so I could be focused on you three. So Pax is doing all of it. He's got all of his numbers memorized. It's hilarious.
Yeah,
I can't do
we're
math.
moving.
I have
Look,
to, if I do simple math, I have to count. But I can remember trades back in 1999, before Cameron was born, or before Chris was born.
Oh man. Yeah, so we're waiting here. I'm bringing in the 4 hours. So going back to that, 4 hour structure, we're holding that support area, which is that 5790s. For NQ, it's the sort of 750 to 790. And the idea is for this 4 hour trend to continue higher. This is creating the higher low, the next higher low that we need. Higher high, higher low, higher high, higher low. And if it can continue, we can push back up, challenge that prior day high. If we can find acceptance there, we can push back out. So that's sort of the governing trend structure that I'm following. And I am looking now to participate. Now, if it, what we should expect here now is for a higher low to come in. If it does not come in, then it should come in at one point. Maybe it can come back in and get my entry so I can participate in this. But as we come into that 5718, it does look like we are probably going to be range bound since we're bouncing into sort of that overnight range. So there's a good chance that now what we want to see price do is sort of, if I were to draw here, this is now, overnight resistance. It should now act as support on a pullback, maybe a little bit lower, but acceptance here, sort of between 5710 and 5720, will mean that we sort of maybe, some may call it a flag, some may call it a wedge if it sort of comes back down, and then push back up higher into 5743. So I'm sort of looking for that, and if it can hold, I'll look to participate.
I like the way you look at the market. Is that what you would call one of your boxes? At least on a shorter term chart, would that be a trading box? So if they flip it above 5720, you're looking to add more.
Yeah. So it's the boxes. How I
Phone a
define
friend.
them are where trend ends. So I touched a little bit on. Let me draw this here. So this is like a box. If you see here, this is a channel, but this is sort of a little bit of a range bound action here. This is on this time frame. There's no trend. It's sideways, right? The drop was a trend, a downtrend. We attempted a new downtrend, had a failed breakdown and reversed back up. So this is the box because there's no trend. Right now we're in a trend structure. and price wants to continue higher. This is sort of the range bound structure that we're in, and now we're attempting the breakout. So on a pullback, if it doesn't hit my buy, I'll probably move it up a little bit to sort of get into the sort of prior resistance. If it can pull back in, I get in on a pullback and then participate on that push back up higher. But it's just going over here without me. But you can see how it was the change in trend structure of this lower low, lower high that pre-market was having. It reclaimed the 9MA. It sort of created a new higher high versus this lower high downtrend. And we started a new uptrend, right? That's by definition a change in trend structure.
All right, so this, obviously you don't trade this way, and I think I know the answer why, but the market held your level. The market, the S&P is starting to break out. So what's keeping you from jumping on now? I think I know the answer, but I want to hear it from you.
Yeah, it's just the risk reward is not the same. I need to have, I need to have the stop here because that's where my idea is invalidated.
Right. So the market has moved too far away from your risk and is a little bit too close to where you would pay for your trade in. The majority of traders, I think, are going to chase that move and they're going to blow themselves up trying to catch it. A disciplined trader is going to wait for the next setup. As Tanya said yesterday, there's always going to be another bus. I assumed, I shouldn't assume anything, but that was a great, I knew that that would have been your response. Yeah. Great response too.
I'm going to jump in for 1 second. We've got data that's just 5 minutes away. Chris, you take control of the stream. You know what was so funny the other day? I don't know if you saw this, but when I let Merritt, I go, Merritt, I'm going to let you just take the keys for a minute, you know, like a dad giving the keys to his car. I don't even know why it was, whatever it was. And then he goes like this. It was so funny. He goes, it's just us now.
I didn't see that.
He goes, Crudele's gone. Now we can get into the real stuff. Oh, man, that was freaking funny. So, Chris, I'm going to give the keys to you for a couple minutes. We're going to get you get Phil, but we got data coming up. We're going to get Shy in studio. So just to Chris alone right now. We'll be right back. Oh, Chris is staying.
All right, we're alone, guys. Just us. All right, so I'm waiting for this pullback to take place. If you can, we're sort of finding resistance into this 5718 zone, which was yesterday's resistance and my first target on a failed breakdown of this 5693. So what I now expect is if we are to sort of take a pause here, then price should have the first higher high here and then a pullback into this sort of 50, this green is the 20 EMA, this red is the 50 EMA. If it can pull back and sort of fill me in, then that'll be great. I can get in on a higher low and participate. If not, it's going to go without me. What I can do is I can go to the 2 minute here and look to see, you can see the higher high, higher low trend structure a little bit better. If it can pull back in and fill me on a pullback, then that'd be great. I can get in. And then from the 2 minute, what I can do is I can manage my risk a little bit better because I'll be trading a 2 minute sort of model. Now, hopefully that takes place here. I know we have data coming up in 4 minutes. We are stalling a little bit. NQ is a little bit weaker. And it's sort of giving that pullback a little bit better. Might be that cyclicals are a little bit stronger. Financials, let me take a look. Yeah, financials are kicking butt right now. It's a little bit of tech that's stalling. So that's what's driving this ES a little bit higher. You look at other things. Yeah, SPY and Qs just straight up from the morning coming into some resistance here. Let's see how our higher low pullback looks. If I don't get filled, what I can then look for is some form of acceptance, which it'll be a little bit of a sideways consolidation. Like here, this prior consolidation here was acceptance. We ended up breaking lower, had a failed breakdown, and pushed back up. Let's see if it can fill me. NQ would have to drop a little bit more for that. But this was a classic failed breakdown, with Delhi's group that I sort of those bunch of guys that I talked to and ladies. This is a classic failed breakdown, and they know I would be in this. But I wanted to make sure that I shared my plan sort of thoroughly with you guys to have an idea of where my head is at and why I'm looking to sort of get long here, right? So it's fine. We can wait. But main trade idea here for me was this 56.93. It all came down to it. It was the bull bear zone line. Very little resistance here at 57.18 for now in the ES. NQ still stalling there, right? If we look at yesterday's action in NQ, we can see that this was that resistance here. It stalled right after the FOMC and then broke out higher. So ES continues. I can't chase it up here. My risk and reward is not the same. At this point, I would be risking too much, and the reward is just not worth it. I'm not going to risk, $100 to make $50.
Plus we have data, Chris.
Yeah.
Plus we have data. So we've got Shy
chasing
in the panel
something
now
into
too.
data.
Welcome to the
Just
panel,
makes
Shy.
sense.
Yeah. So data's just hang tight, everybody. Chris, great job. No position, but following along what Chris has been doing this morning is really great.
Impressive.
And going back to all of our morning prep, it's been
Spot on.
Yeah.
Truthfully.
And looking,
Thanks,
we talked
guys.
about even, you and I, and a little bit, opening range, how it matters. I mean, Chris laid out his entire framework for it. And, again, I think it's going to get a little choppy here. We got this data coming out. Whenever it's ready, Shy, just interrupt us and just fire it out. But we'll see if it's market moving. No positions on for Chris right now, but I think that this is a good low. You and I talked about it. We'll see if they build on this data. And Chris, kudos to you for staying patient with it. Worked the bid, didn't get filled, didn't chase. We're not here to chase.
Existing home sales expected 3.95 million, actual 4.26 million.
Ooh.
So that's pretty good. And then month over month was 4.2% higher.
Are we raising rates? Is this what's happening?
So
What's bonds?
Steady.
the economy looks, home sales look good.
And bonds finally broke now. You know what? I go back to where my daily was, and I think that the S&P has got a decent low now. I can't see NASDAQ at the current moment, but I would assume NASDAQ's taking off here.
I went back and looked exactly when that happened, when that puke overnight happened, and it coincided with the SNB lowering rate.
Yeah, beautiful.
And I think that sent uncertainty kind of across the markets because you saw European markets dump as well. So I think that was the actual root cause of it.
Oh, yes, that is absolutely right. And that's also what pushed the 30-year up and the 10-year up,
Yep.
which I thought was going to drag on equities this morning, but it's not. So now the 30-year is reacting to U.S. data and is reacting to what the U.S. equity markets are doing.
Yeah. Chris, do you look at the macro stuff? I don't know if I've ever even asked you that. I mean, does it play any role into your stuff or no?
I do because I swing trade. So I am looking to sort of stay aligned with that. Then I'll compare the technicals and align with that in order to really, put on the size that I want and participate, right? If we're contracting, the economy is contracting. If it's not, what is CPI? What is the inflation possible, forecast for the next few months?
Are you looking at the macro before you're positioned or after you're positioned to confirm your position? If that makes sense.
I would say it all together. It sort of creates an environment for us, right? Not only for futures, but also because future, the daily will move in alignment with what most participants are doing based on that data. But it creates that environment for us to either thrive in as swing traders, and we'll create bullish structure for day trades, or sort of change that environment around, and it sort of gives you a month-to-month update on what's happening, and that will change my type of trading. Like I've moved to cash in February, and I've been very minimal with swing trades because of everything that's been happening, and the technicals aligned. We had a big failed breakout February 21st, and that triggered the reversal back lower. that was, everybody thought was these tariffs wars, and it is, but that failed breakout in February 21st is what triggered that push lower.
So are you more of a long side trader than you are, or a better long side trader than you are a short side trader?
For swing trading, yes. For day trading, I do love shorting. It's just the opposite of what I would do here. But yeah, swing trading, I'll be in cash when we are not in a right environment, like right now. And I'll focus more on day trading. I mean, the last 2 weeks with the volatility and the high VIX, I was a ninja on this 2-minute. There were so many setups, 3, 4, 5 setups a day. And I usually want to do 2 trades a day, but it was just, nonstop, a great market for us. So I was very active, and this week has been a little bit more different.
Getting back to what's happening in the markets right now, you see this is just, it's running away. We talked about this earlier today. This is a move you don't fade. It's just a matter of if there's a pullback, you buy it today. I think that the markets are, from my perspective, this is setting up for a bigger rally. I don't think this rally is something that stalls now. I think they could drive this thing home for the next couple of days. I mean, tomorrow, obviously, with options expiration, you never know, but I'd be hard pressed to see a big sell off after what I saw this morning.
So one of the things that we talked about yesterday was my view of the market, my view of them, whoever they are, trying to get the S&P, the March S&P to expire as close to December expiration as possible, which is 58.40. So you got a few things in the way there. That 57.30 level, which it looks like they're going to hold through today, and then 57.70, yesterday's high, that old swing target, going back to 58.40, by the way, and then the 200-day. I think I said this yesterday, or I certainly thought it. And as you know, the dialogue in my brain and what comes out of my mouth could oftentimes be the same thing. But I thought, and I said out loud, that I believe that they wanted to take out that level, and they wanted to close it above the 200-day or around that, expire there. So with the bonds breaking, the bonds coming off that, I don't know what the high was, but with the bonds coming off a little bit off the high, and the equities rallying and pushing higher, that's what I think they're going to do. So and not to mention the fact that the low of the day is made in the opening range, and that almost all the time is a trend day.
Yeah. Christian, getting back to what you're looking at for a trade setup today, I mean, I know you were working the bid. Now I can see everything you're doing. You pulled your bid, and now what's the plan? What's the thought process going forward from here now?
So we're coming into resistance at this 43 zone. We've gone straight up. We need to get a pullback to create a higher low against this sort of breakout. Depending on how that higher low pullback looks, we can sort of create acceptance here, consolidate, and then set up a different type of continuation setup versus this. This was a reversal. And I can then wait to see if we can find an entry there to get a push back into London highs or even prior day highs. But, I can't chase this up here. It already would have hit 1.5R for me, where I would have taken partials. So I need to wait for more data here to tell me, to confirm, are we finding acceptance, or do we reject and sort of create that sort of range-bound environment that we could possibly get? Although I think we can, based on the morning move, we can get maybe a little bit of consolidation here and continue higher.
Yeah, I mean, and now I'm also looking at everything. You got Russell participating in the rally. You've got Russell's the lagger, but Dow, NASDAQ, S&P, all up relatively about the same percentage. They're all moving in unison. This is what we talked about. This is when I think, going back to even your framework this morning, Christian, it's just everything we talked about. Now the market's setting up again where it's like the divergences are starting to unwind a little bit. We're getting towards the end of roll.
Yep.
Right? I mean, even though we know we're June now, but we got a triple witching tomorrow. And the market is now setting up for, okay, we feel good about the low. Doesn't mean it is the low, but the market is starting to say, okay, let's look at these indexes. We've had some price stability now off these lows. We tried again today. Overnight, we had some news that they tried to hammer it down. And I feel like the market's setting up probably for at least, this is now, a rally is now a mean reversion to trade. I mean, that's the other thing. It is not the trend.
Right.
The trend is down.
So let's not forget, we haven't talked about this. Expiration for us, because we're futures traders, is incredibly important tomorrow. But we're going into the end of the quarter next week too. So what are the funds going to want to do with this? Are they going to want to try to mark it up and get it as close to D's expiration, 58.40, or to the yearly opening range where we open the year? Steady on the year is 59.49. Are they going to try to really push this up to settle it the year out, the funds out, as close to 59.49 as possible? If they hold this low today, I think that they can.
Yeah, I do too.
I mean, it's a long week.
It could really 200 points and still be bearish. I don't think that people think about that.
No,
right
that's
now.
100% correct. Absolutely.
Shai, I want to the macro picture right now painted for us a little bit. I mean, what is out there right now that would be something that you think, I mean, anytime we can get a Trump tweet and that could derail this market, but is there any data, what's coming up that we have to worry about that I think the bulls should worry about for the short-term momentum that they have?
Well, I think the biggest risk is Triple Witch tomorrow. I'm looking forward to that. That's going to be your biggest risk just because of the uncertainty. We don't really have any market moving data tomorrow. And so far, markets seem to be brushing off this risk-off move from the SMB situation pretty aggressively. So to me, that says that, what the U.S. data is telling us is that, everything's still pretty strong, and we'll see what happens from there.
Christian, back to you. Lay the groundwork for us. We're going to stick with you just for a little bit here, and then we're going to let you go. And then we've got a little bit of a break with Jim Cagnina, who's going to give us a market update across the board. Kind of lay out for us what you're seeing right now. I mean, we've probably got a lot of day traders out there in trades, looking for trades. Remember, don't chase everybody. Be good.
Oh, please don't. You'll be driving Uber.
Yeah, as Uncle, you're Uncle Pax now.
Yeah.
Tanya Trades calls him Uncle Pax.
I saw that.
Yeah, so now we got Uncle Pax in studio today. So don't disappoint him. He gets very upset if he sees if he sees people, chasing stuff. Don't chase. I told you don't chase. Opening range is the low.
Amazing.
We're probably blasting everybody with our mics now. But Christian, lay the groundwork for us for what you're looking at. Just kind of give us some color.
Yeah, so we've gone straight up from the open. We're into that first area of resistance for both ES and NQ. We need acceptance here, meaning we need to find confirmation that price is not going to be rejected. It's too early to tell right now. This is just the second candle into this sort of resistance area. We need to see how that rejection looks, if it can create a healthy higher low, or if it rejects back down. Typically, if I was bearish and I was looking to short, I would be looking to short here via a 5-minute or 2-minute reversal to the downside, similar to like this bullish reversal. But I am bullish on a daily and weekly time frame. I think we're bouncing up a little bit higher to create that weekly lower high. So I want most of my trades to be long to capture that upside because, I touched on a little bit. I am a trend follower, so I'll look for an intraday entry, and if I can hold that for a day to 2 days, that'd be great. So, but right now at resistance, can we push up a little bit higher? Yes, no. Either way, we need to find acceptance in order to get confirmation from price, from structure, to tell us that we are going to continue higher. I need to wait for that. I am a heavy rules-based trader. My setups and my models are defined. And if that's not there, I can't really take a trade. I can't think, oh, it is going to break higher. It looks like it's going to break higher. Enter. I can't create that trade 1,000 times over and over again, right? Because it's not the same. The requirements are not the same. And therefore, I can't, in this exact moment, I can't do anything. I need to wait for my model to show up and execute.
I wish more traders were systematic, Pax.
Oh, man. Well, that's what makes markets move. If everybody was as disciplined as Christian, we'd be sitting in the same spot. But no, you're right. 100% right. It would save a whole lot of money and a whole lot of heartache and a whole lot of pain.
People think that discretionary is cool or they're smarter than they are. I mean, you and I both think we're smarter than we are. I mean,
for sure. Actually, not anymore.
We don't think we're better looking than we are. That we got that, but that's the rest of it. We don't have.
No, that's the truth. That's the truth. You know, the market's always right, and we're never smarter than the market. So let the market do what it's doing and stay out of the way. You don't need to catch every trade. You don't need to be part of every wiggle and every price change.
Yep.
And those that try to be are going to get destroyed in the long run. Something might work 990 times out of 1,000. It's the last 10 times it doesn't work that you blow your account, you blow your life up.
And you know that's the life cycle of how many traders. I mean, it's just what happens, right?
Right.
You know, today I think it goes back to it. It's like, what do I want traders to get from NinjaTrader Live? Preparation. Then you get into some macro. You get into guys like Christian. He looked to take a trade. He didn't get it. He didn't chase it. It sets the tone. It's important.
Yes.
Right. Not every day we're going to
Yes.
get a trade in here. Not every day we're going to get a chance to execute a trade if we want it. That's the whole point of this,
Yes.
right? The point is to slow things down, last longer, because time is your friend. And so
100% right.
hopefully today, if anything, we're keeping people away from being short, right? I mean,
Yeah.
that's the key.
Oh,
I mean, this
please.
morning, the low was just it's so funny, you know, you never know how it's going to happen. And then it happened. Today it happened so fast off that low. And you're like, okay, you get that feeling. You're looking at it, all your prep, you're going, that's a good low. You know,
one of the things that Christian said, and I think, and you just echoed it, is so super important. I see trades taking shape, 10 of them a day that I don't take. I let them pass me by. I see the market, you know, I don't know what the high is, 57.42, 43, and and it's coming off a little bit. Hey, it's exhausting, or I can take a short. I don't do that. I wouldn't get short this market until we took out the low of the day. That's a 50 handle, break back down to the 60 handle break back down to the opening range. And I'd rather miss that and take a short like Christian is. Wait for the market to come to my setup, wait for the market to give me something to sink my teeth in, because something else that you and I have talked about a million times, I know where I'm wrong. That's something that we learned from Mickey. I know what my outs are. I know where I'm wrong before I take the trade, or I don't take the trade.
Yeah, and you hear Christian continue to say it. I mean,
Yeah.
I think one of the biggest things too that traders need to take from what Christian was saying this morning was his risk reward changed. If he would have paid up for it, even though he thought that they could continue to go higher, he goes back to his preparation. If you believe in your preparation, like Christian, like you, like me, that's when you don't veer off the path. 'Cause the mistake comes when you don't really believe in what you did. your prep.
100%. Where are you wrong? Before you take the trade, where are you wrong?
He stays true to where he's wrong.
Right.
I mean, that's the key.
That's 100% right. He knows he's wrong.
He's
at the
executing
low.
off of that.
Right.
Exactly. I just want to go to Shy real quick again. Shy, across the board, is anything going on that we need to keep an eye on for today? Is this environment setting up to where maybe other things are happening in commodities or gold, energy, to where this rally might get a little bit more boost from it, or is everything else just kind of simmering along, not doing much?
Well, we've seen crude kind of follow this rally up a little bit. We're up 62 cents, 60 cents from being negative on the day. And metals are still pretty flat on the day. So we are seeing a little bit of movement in energy, and that's about it right now. Grains are a little bit higher. Good for grains.
Yeah. So, I mean, the focus is equities again. Not that it never always isn't equities.
Where's a
but,
30-year?
30s are at 118.10.
No, all right. So they're still hanging in there.
They're hanging up there.
Pulled back a little bit from this morning, but certainly didn't retrace that entire move up.
So, Christian, we're in your box up in here right now. This is that resistance zone you were talking about, and so is this where you think they stutter step, or what's going on in that highlighted box here?
Yeah, so it's continuing higher. There's really no pullback here. I was looking at the 2-minute, but the 5-minute is, in order for me to say, okay, I've missed this initial move, where can I find another entry? I need a little bit more data than this. This is not enough. Again, I'm looking to capture trend. So this is an initial trend here. Based on my backtesting, my analysis, entering on a 3-bar break is not enough consolidation for me to participate in a sustainable trend. Now, because of the overall move that we're having, sure, we can see that, but can that happen 1,000 times over again? Probably not, right? And so if we're a high probability trader, I need to wait for what creates a high probability trend. And we had that earlier in the morning. I tried to buy it if it pulled back, but we just went straight up. We haven't really had a pullback here. We still, don't have enough data to sort of confirm, hey, are we accepting and can we break out higher? Or can this sort of be a failed breakout and push us back down to sort of chop around here? It's sort of a waiting game for me based on my own entry models. I think if we are seeing momentum here continue, then we're probably going to push up to this 5-minute zone that I have here at 57.55, which I believe is the London high. It's at 58, so it's a little bit above that, but this is that next area of resistance that we're coming into, and maybe from here we pull back.
What's the price zone on that box? What's the price zone?
I have this one here, 57.43.
Yes, 43. What's it? That's the top of it. What's the low of it? 39.
No, the low is 42. The top is 44. I just do a 2-point range on each zone to sort of give me an idea of, I don't want to be sort of stuck on a exact level. I just know it's an area of resistance. You can see that we stalled here, and we're looks like we're going to continue higher.
Again, not a rally I'd be fading anywhere today. I mean, we've talked about this. I mean, it's
really absolutely not.
You talk from shy. It's quiet news. You talked about Christian. He laid that structure out perfectly this morning about what the potentials were going to be.
Yeah.
You got an opening range from you. You got the low of the day is my level and similar to Tanya and Farms. You got a lot of confirmations out there that momentum can build.
That's also a good point. So this morning, with bonds higher and the rejection off of 57.70, I really kind of thought that we can start lower again. But the opening range, I'm systematic in my trading. The opening range coming on the first attempt, 2 attempts, I would have been long, and I would have looked to have added above that 15-point rotation, even though my sentiment coming into the day was the opposite. So if I don't trade my opinions, I'm not going to trade my opinions because, like you said, I'm not as smart as I'd like to think I am.
Oh man, that's funny. Yeah, just setting you guys up for we got a jam-packed rest of the day too, and we've got Marty from NinjaTrader. Everyone keeps my phone buzzes nonstop. Marty and I will be talking today at 11 a.m. I know, Christian, you asked me on X yesterday, is this true, Anthony, or is this true, Deli? Well, we're going to talk about this with Marty today at 11. It's big news for NinjaTrader and Kraken, and so we're going to, cut through everything and talk about that today. So
that'll be exciting.
Oh, it's big news for the futures world. It's big news for everybody.
Yeah, and so we're going to talk, details of kind of what happened there and what it means. So we've got that coming up, and then, later this afternoon, trading the close, man. Those guys from Order Flow Labs have been great. I got to tell you, they've done.
Yeah.
Absolutely.
They are. Yeah. All those guys I really like.
I do too. The only one I was really familiar with is Leo.
Yeah.
So it's been fun for me to get to know the other guys too.
Yeah. And Leo got called out this morning, and somebody called him the young guys. Leo, was that you? They called him?
Yeah.
And I said, no, Leo's old. Leo's over 40 now. He's hiding his hair in his hat. He hasn't gotten gray like you and I yet, though, Pax. He'll get there. I know. I was laughing yesterday. I saw Pax. I hadn't seen him in a while. He's getting more gray, and it's funny. It accelerates once you get into
It does.
I'm late 40s. You're mid 50s.
I'm late 30s.
Yeah. I'm at the 50% fib. If you look at it, you could kind of split me right down the middle, right there. It's weird that half my head is gray, the other half is staying.
You know what though? I've got a brother that's a year younger than me that's completely bald, so I'm happy. My hair, I got a full head of hair. It might be a little salty or a little peppery or whatever, a little salty, but
it's
I'm
distinguished.
All right. Thank you, my sister. Thank you. That's why I love Tracy.
And, Chris, we apologize. We had a busy day today. We kind of ambushed you early on. We had Pax in studio. We'll get you set up earlier, make sure that you were able to do your process earlier. And we're just beginning here. It's the first week. We're working through everything. But and I wanted you to meet Pax, and then it's hard to stop Pax when he gets momentum. He's like, a rally. It's once he gets going, that's it. I can't even cut him off. I'm always like, hey, and he goes, and wait, and
Hey, I didn't blow that long for you. I wasn't talking too much through you, taking that trade. Did I? Oh, that'll make me feel. Now I'm going to be thinking that all day, and I'm going to feel terrible about it. Oh, poor Christian to be long,
he could have made all the money. I can't believe he didn't do it.
I know, right? No, it's all good. It's great hearing Pax. I mean, look, a lot of traders need to hear from him more often. They need to hear the challenges that we all have gone through our health, because these life events happen for everybody, and that fortifies, right, the discipline and the consistency that you need in order to succeed in this. There's so many now in the prop firm world that are just blowing through these accounts from lack of discipline and all these things that are failing. And if they have veterans like you guys sharing that wisdom, it really helps sort of remind us, hey, like Capital Preservation Friday, yeah, think of risk first, manage that first, right? I needed to manage my risk on this trade that I wanted. I missed it, but I can't chase it because I can't say with confidence that over 100 or 1,000 trades, I'll be able to take that trade consistently over time. And if I don't have confidence in my ability to execute when I need to, then will I have success? Will I have a sustainable future? It's hard to say yes to that, in my eyes.
If you chased that trade and you got rewarded for it today, if you would have chased it and you made money on it, that would have reinforced that bad behavior. So the next time you do it, you blow yourself up, and then, or you don't blow up, but you hurt yourself, and that leads to negative momentum that eventually leads to you blowing up. So what you did today is the mark of a long-term profitable trader. Okay, you're waiting for your setup. You're waiting for it. At the same time, you're maintaining your spiritual, emotional, and physical health. You're going to go take care of yourself today because you've got nothing in. Now if you would have chased that and got rewarded for bad behavior, all that is doing is setting you up for disaster down the road. And believe me, like in my Twitter bio, or in my X bio, it says I've made every mistake in this business so that you don't have to. And that's why I post so honestly about it, and I'm so gratified. It makes me feel so good when I meet a trader like you and I can see, that the things that I have gone through in my life have meaning, have meaning because you're hearing it, you're listening to it, and you're learning from it. I get messages, I was showing Anthony, I get messages every day from people that blow up, every day from people that I did this morning. I got 2 this morning. So it's great to meet somebody like you who I know, is doing all the right things, and continually learning. None of us are perfect, and we're always going to make mistakes, but we learn from them. We pick up, we learn, because like you did, like I said earlier, you pay attention to your experience, and you learn from your experience, and you grow through your experience, and that's going to keep you moving along until maybe your hair looks like a Fibonacci extension or retracement like Anthony's, or is a little, or you're 55 years old and a little bit more salty like I am, and or somebody else that Anthony and I both know and love, Ira Harris, who is in his early 70s, that still trades every single day. He hasn't needed money since 1985, but still trades every single day because it's a journey, man. He is still on that journey. If we stop moving forward, we start dying.
What I find interesting is that, Christian's already, he's not a super active day trader, but he's already moved into more of a swing. Well, he is a swing trader. But like for me, I use options now. I'm not day trading at all. I haven't been day trading much for the last few years. And I think part of it is my time is just limited. I'm more comfortable looking at a chart on a longer time frame now than I am minute by minute. And even though you're short term, you're not very active. I mean,
Not
you're
anymore.
you're only active in the one trade.
Yeah.
And it's like as time goes by, I mean, the amount of activity that I've reduced, and it's like I've been this year's actually been a pretty decent year for me. I have not done a lot, but my win rate has been pretty good. I mean, I got blasted a couple of times. What are you going to do? But it is what it is. But ultimately, it's like I never feel – I think it's also just helped me stay balanced at this age. People don't get it. You chemically get a little different as you get older. Like my patience now are greater than they've ever been. But like if I feel a lot of back and forth in the market and frustration, I step away. That's why I don't trade as much.
Me too.
I don't. It's just I look at it and go, I don't. If I'm sitting there getting whipped around, I don't need this.
Me too. I am a lot less active the last year, especially the last 2 years, a little bit, and kind of segueing into it than what I had been my entire life. but I'm still involved. It's been a great year for me. That break from 61.66 to 61.66 to 57 even was great. But I also don't need to be part of everything. And the chemical changes are important. We were talking last night about just about this, about our age. My 50s have been by far the best decade of my life. My faith in God is strong. I'm married to the love of my life. 5 beautiful kids. I've got, I'm happy and I'm grounded. My feet are firmly planted on the ground.
Yeah. So funny story. What we got? I mean, market's making new highs again. Nothing's changed. You guys know we're bullish. We don't have a trade set up. So yesterday, Pax gets into town, and he's like, "Hey, I want to go work out." I said, "Yeah." So I sent him.
Here we go.
He goes, okay, sure. He's like, "Can I go?" So I'm a member of a club here. I said, "Yeah, go to the club." I send the girl who's head of fitness. I said, "Here's the, here's his name and number. He'll be calling." She goes, "Is he a tall, slick back hair, guy, kind of like you, but just taller?" I said, "Yeah, that's probably him. Could be." Although a few of my friends do look like that, but she goes, "Yeah, okay, just send him over." This is at like 10 to 3. I said, "He'll probably be there soon." Next thing you know, it's 3 hours later, right? He's like, "Oh, I'm here. I go, "Well, listen, man, you need a key fob after 5 o'clock to get in there." He goes, I'm in. I got in. Next thing you know, he's okay. He goes, "I found a locker." He's in the locker room. Next thing you know, he finds his way into the gym. An hour goes by. I don't hear from him. I go there, and I walk in with the key fob, and I'm down the hallway. There's nobody in there, right? And so I'm walking. Now, in our club, it's like a U-shaped, and then in the middle, there's a big pool. And if you go from the locker room or from the gym into the pool area, you can't get back in. So you have to understand this, right? So it's like because you need a key fob. So I walk in, I'm like, man, I wonder if he's here or if I wonder if he left. And I swear to you. So I walk and I look around the door. He's pouring water and he's trying to pull the door over to him.
It was like in purgatory.
I go, "You need help, sir? You're
How
going to
long
call
were
me?"
you stuck there?
I don't know, like a couple of minutes. I thought to myself, I was lifting, and I thought, well, I wonder if I can get back into that locker room. And so I went to go try to get back into the locker room, and as soon as that door closed, I was like, oh man, nah. I just locked myself out. So then I saw this thing with cups and water, ice and water. I thought, all right, well, like the inner dialogue in my mind are like, okay, I got my keys, I can get out of here, I got my phone, that's good. So I'm going to go pour myself a cup of water and just evaluate the situation. So I'm going like I'm thinking what's going on.
You need to evaluate the situation.
Talking to myself, all right, now maybe I can just wait a minute. Oop, drop my phone. I can just wait a minute. Or I can, well, let's see if I can maybe get this door open. And here comes Anthony. While I think I was talking to myself, like, kind of I entertain myself, constantly thinking and talking what I'm saying.
The timing was impeccable.
Oh,
so
we
I figured
laughed
I'd throw that in. So we're, bottom of the hour at 10:30 Eastern, same thing. We're going to break here in just a minute for the Edge Report with Jim, just trying to throw some levity into the situation today. Like we said, we've started you off today in the NinjaTrader Live Network with everything we got from prep. We don't have any trades right now. Again, it's about staying patient, staying disciplined. Sometimes we'll find some story time just to, like I said, bring some levity to it. It's lonely out there trading alone.
It's hard.
And so we're gonna have an Edge Report with Jim, and then we're gonna let Christian take it into the 11 o'clock hour while I will come back on with Marty. And so a few minutes left, and then Pax, you'll be here tomorrow morning to do Capital Preservation Friday. And of course, Shai is gonna have hot commodities later right after following Marty. But final thoughts on the markets right now from you, Pax, before we kind of go to a break. Like, just give everybody your overall look. Like right now, we're trading 57.51 in the S&P. We've got 10 years trading 111.10. 30s at 118.09. Just giving you the lay of the land. Just kind of quiet. Thoughts on technicals? Like, give us the technical layout.
If we can get above 57.70 and then the 200-day at 57.79. Then they're going to want to going into tomorrow. This is more of a swingy trade. If you've got something on from the opening range, traders in my group stay long. If we get above 57.70, 57.79, then they're going to try to expire tomorrow They're going to try to expire March as close to 58.40 as possible. And then going into the end of the quarter, as long as he sustained today's low, then I would suspect that, and this is nothing to do with today. If I can, then I suspect that we're going to see 59.49, which is, steady on the year. Otherwise, if we hold 57.70, then we can, we'll bounce back and forth within the range, and we'll see. So just, don't chase, don't force, don't chase. Here's another Anthony Crudele line. Most traders force their trades. Great traders are forced to trade.
Boom. Yeah. And as we said, Christian didn't get his fill early. He didn't force a trade. He's got to be forced to trade when price makes sense. And so, yeah, we're getting close to CAGs. And like I said, no late afternoon data, no bond auctions, nothing.
We have nothing, and we have nothing tomorrow.
Right.
It's going to be quiet, and it's all going to be all about Triple Witch.
Yep.
Yeah. Well, if Cagnina's ready, I'd like to bring him in for an edge report. And then, like I said, Christian, I'll be back with you towards the 11 o'clock hour, but you're going to take after CAGs is done, next 30 minutes is you. Maybe you get a trade, guide everybody, give everybody, color on what you're seeing. And me and Pax are going to go in the green room and watch you.
Sounds
talk
good.
with Shai and have you lead us. So if CAGs is ready, we'll bring him in.
All right, I am ready. I didn't know we had a green room. That's cool. I don't have a green room, but anyway, in any event, let's take a look at the E-mini S&P for starters. We have a situation where we have an initial balance breakout on a 3-month look back from Edgefull, 63.64% chance of a single break, 18.8% chance of a double break, and 18.818% of a no break. Right now, there's no break, right? This is the first candle after the initial balance. Remember, we define initial balance as the first hour after the New York bell rings. I know everybody, might define it differently, but that's how we're defining it right now. So right now, we're no break. We're kind of in the middle there. One thing to point out, though, we have a really nice level of overnight resistance that we tapped on the previous candle, couldn't penetrate through it. So now we're kind of retracing back down a little bit. So we'll see how it goes for the E-mini S&P. And remember, we have those JAX levels at 57. We have the actually high vol level at 5,700, 5,750, and then JAX at 5,700 even. So those are also important levels here today as we go to triple witching, which is right around the corner. Let's take a look at the 10-year notes too, because notes are up, bonds are up. The treasuries, especially the long end of the curve, are moving. And what I did was I've highlighted the gap up, right? So again, we're going to edge fill. We're looking at gap up percentages, probabilities, odds. It's not an odd. It's like we look back 3 months and we say, all right, over the last 3 months, how many times have we filled a gap up or a gap down on an instrument? And this is the 10-year notes. ZN's a ticker symbol. And based on a 3-month look back, 40% of the time it's filled, 60% of the time it's not. And I shaded that area, lightly right now. So we're not even 50% to gap fill level right now. We're sitting there at R1. We're kind of stuck at R1. The other thing I'm looking at is, again, initial balance breakout. I'm applying it also, same time frame, to the 10-year notes, 75% single break on a 3-month look back, 25% on a double break on that look back as well. So things are retracing nicely, and I do have a fib retracement on here. I love putting these fib retracements on here when we have such a nice move, right? So we hit a low down here earlier. I don't know, what is that? 3:30 to 4 o'clock candle. We hit that low. And then we kind of, really had a nice steady Freddy rally all the way into the open and then a sell-off. So I kind of measure my fib levels. And it's amazing when this happens, right? We have like 3 areas of interest right here, right at that 50% retracement, 111.09, 9:30 seconds. And it matches up perfectly with R1 and the bottom of the initial balance. So that's a keen area of interest right now. We'll see if it holds or we break on through. It's anybody's guess. Deli, back to you guys.
All right, guys, I think it's back to me. They're over there in the green room. So we are sort of stalling into this resistance area. Let me bring up the 5 minutes here. I'm waiting for a pullback. My rules have me say this trend is not over yet. I need a pullback to take place or a sort of consolidation right at the 57.43 area to then give me a proper setup where I can manage risk, right? In here, my trades are mostly either a reversal trade, like in the morning one that I missed, or a continuation setup where I need a consolidation of maybe 8 to 12 candles where that can create a sustainable new uptrend. In here, this is still chasing to me, so I can't enter here. Like in here, I would be down to partials. You guys can see here that 57.37 would have been 1.5R for me on that morning reversal idea. And up here, I would be just letting my runners run. I can't short. We're right under prior day high in ES, so ES might want to take that out right over here at the FOMC high. So, maybe because we haven't had a pullback, there can be a short opportunity. So, you know what? I'll look for that. I think there's a good chance that we can finally get a proper pullback if we take out that prior day high, which is at, what's it at? Let's see. 57.70.50. NQ is a little way below that prior day high. If I do take a short, that would be a mean reversion setup. We do have some RSI divergence here. Well, not only RSI divergence, but we also have a divergence between ES and NQ. If you can see here that we have ES has made a higher high and NQ has not made a higher high, right? It's almost like equal highs. So that might be an indication of a possible reversal. So let me go into the 2 minute here and let me see if there's a good opportunity that comes up. But again, I'm bullish biased. My ideal trade is a pullback, and then I buy that pullback to continue this uptrend. But because we haven't really had one, maybe I can participate in that pullback and maybe look for a 1 to 1.5R return. Okay, so that's what I'm going to be looking for here. And either it works or it doesn't. And by pullback, I don't mean, I want to make sure I'm clear. These little pullbacks that you've seen, sort of like a 2 or 3 candle pullback, continuation, 2 to 3 candle pullback, that's not a pullback to me. A pullback is where the 9MA, this yellow moving average, ends. So right now we're in a 9MA uptrend. That needs to end in order for me to have a proper pullback. So what I would be looking to participate in is in that pullback from that 9MA into maybe this sort of green shaded support area. If we can do that, that'll be a good trade. But again, I need to wait for my rules, right? I would love to put on a trade here for all of us, but I need a rule. I need my rule to be met. You can see Delta still pushing to highs in ES, so there's no rush for me to short. In NQ, it is stalling. I highlighted, we have sort of equal highs, which may be taken out in a bit. But my preferred short area is into that prior day high. And now I'm just going to wait for it. Okay, the hourly has had a huge 2 green candles straight up. 15-minute, 1, 2, 3, 4, 5 candles straight up. I mean, this is the move that I would have been in, right? I missed it. Oh, well, there's always next time. But I couldn't chase. I just couldn't. Because I want to participate in trends. And, if I miss that, I miss it. Hey, no problem. Thanks for the comments. If I was in scalping mode, I would probably be taking these 2-minute flags. Right, which you can say this is sort of like a wedge 2-minute. but you can see it was at that 57.43 zone, so you didn't really have that much confirmation yet to really put on a long, unless you're sort of scalping, and I that's not something I wanted to do today. So now I'm waiting to see if this trend ends soon. And what would that look like for me? Well, first I need to see divergences show up in Delta or in RSI. As you can see, RSI has had those divergences. We are making lower highs. In NQ just made a new higher high, but you can see that RSI is making a lower high. So we have sort of a indication that these new highs are sort of coming to an end, right? We're still pushing, but maybe this is just that last push, that sort of climax move for EFs to take out prior day high, which it looks like it's going to here in a second. Thanks, Michael. Yeah, we have to be disciplined. We have to be patient because, I certainly can't take a long up here. It's just the risk reward doesn't make sense. We're about to take prior day highs. And for those of you who know, prior day highs or prior day lows is typically where we see a reversal area. And because we've sort of been in this sort of range bound structure, we have to think that we're sort of going to find some resistance again and then reject, right? Why? Because now we need acceptance. We need consolidation into that resistance area to show us, right, to confirm from a technical perspective that sellers are not driving price back down. What do I mean by that? If I go down here to the 15-minute, you can see that these last attempts here, rejection, right? There was no form of acceptance. If I go back to the prior push, rejection. So you see it was like a straight move up and then rejection. So what we will now need to see, as I'm watching the 2-minute here for a possible reversal setup, we now need to wait to see on this next push, either rejection again or acceptance. And acceptance looks like consolidation up here, because what that will confirm to you is that sellers are not able to drive price back down, or they attempt to, but buyers are now stepping in and creating higher lows against that resistance, right? And we haven't seen that. History over the last week or so tells us that it's still resistance, and we need to wait for that change in structure into this area of resistance to confirm acceptance, right? If I don't have confirmation from a rules-based trader, then I can't really put on a directional trade, right? I'm getting notifications from my group that all of these guys took this reversal long here, and I'm happy for them. I missed that, but let me see if I can sort of participate on a pullback here. And what I need then for this pullback to sort of trigger for me potentially is for us to fail to hold on a 2-minute time frame, for us to fail to hold these most recent highs here, and then the 9 MA sort of to give out, right? Because similar to this sort of reversal in here in the morning that I wanted to take, or would have been my trade, it's the 9 MA in yellow was reclaimed, and price reclaimed that last that candle, that reversal candle, right? So I need to see that here to confirm, because for now we're still in a higher low structure. So what I need to see happen for my entry requirements to be met is I need to wait for this higher high, higher low, higher high, higher low, higher high, potentially higher low. If then at this point, this higher low fails to produce a new high, meaning we're now potentially creating a lower high against that last lower higher high, then what this can do is push back down and trigger that push back into what is support at 57.43. So I need to see the sort of higher low, if it happens, right, fail in order for me to look to enter, because when that higher low fails, let me delete all of this. When that higher low fails, that'll be confirmation of that trend structure ending. And as of now, we have not had that. You can see that all these higher lows into that 9 MA have held, and therefore we are in a uptrend by definition. Like, nobody can argue that, right? I need to see that higher low be put in, and then us fail for me to enter, and I'll look to enter short, and then I'll put my stop at the highs. But look, ES is, I think, 5 points away from prior day high. We're coming into resistance. On the 15-minute, we've gone straight up. I do expect some sort of consolidation, give back, pull back, and I want to participate in that, right? So I'll be looking to do half size because it is counter trend, and I want to make sure I manage and protect my capital as best as possible. In this bullish reversal here, I would have been full size to participate in the plan that I shared in the morning. Hey, it was pretty straightforward. Hold 56.93, that bull bear zone line, continue higher, right? And we've had just that straight up. So, Joe, that is a indicator that was made from me by Ninja. It's a EMA cloud. It sort of shades the space between the 20 and the 50 EMA. It's just a visual look to show, hey, that's the mean if we were to get a pullback, right? So that's what I would be targeting. But as I wait for this potential short, I'll answer some questions if you guys have. Yeah, thanks for the thumbs up, guys. 57.48. Yeah, I have the 9 MA. But look, we're just grinding higher, right? We are sort of pushing up into this prior day high. And I'm looking for a pullback to the 9 MA to create that higher low, both in ES and NQ, and then look to see if we can get, which may be happening here. Delta is still pushing higher. So you can see, I mean, our plan was pretty spot on. So if you didn't, is what I tell the guys and ladies in my group, hey, don't wait for me for a trade, right? The point of the trade plans that I create are to help you stay aligned with the trend, right? Which clearly the trend was higher. And if we can, we're getting our higher low here. So let me see here. Yes, double piece. You can message me on Twitter if you're interested in talking further. But we might be getting our higher low here on the 2-minute. So let's see. I'm going to look to look for a short here. If we can break below this, I might just enter here. I really like this, but let's wait. Let's be a little bit more disciplined, right? We've been disciplined the whole way. Let's keep that going. But you can see that this higher low here is attempting to fail the 9 MA. So what I'm going to be looking to do is get short. I really do like the short idea right now. Let me actually. Yeah, the 2-minute is breaking here. Let me put on a here.
Order submitted. Order filled.
Oh, that's a pretty wide spread. Let me sell 3 more. I'll leave that on for now. Let me see if we do break down. Again, this is just counter trade, and I'm looking for a mean reversion back down. So this is, I have my stop at 1R, minus 1R. I have 1.5R, but technically it should be at the high. So if this is minus 1R here, then 1 point, I'll do this. All right, so I'm going to move this down here to 1.5R. This will be here. And then this will be here. So let's see what takes place. I do, we are coming into resistance. We might not take out prior day highs. I do want to be looking for a sort of small mean reversion move just back down. And I have my first partials here at 1.5R. Just because it's counter trade, I am going to take off more here at 1.5R. and I'll leave like a runner, right? Because it is counter trade, guys, and we are seeing a big push higher. So I do not want to stay in this trade. Right? I'm not looking for a big push lower. Like it's clearly we're pushing up higher, and I want to just see if we can get a pullback into some support areas. Because this is the initial reaction that we're getting here is a rejection into that resistance area that I've highlighted. We need to form acceptance up here to confirm a new sustainable push higher, okay? Until we get that, I have to believe that this is resistance and it'll at least provide some sort of rejection, right? So it's in alignment with my plan. I was looking for a push back up into here as long as the opening lows were to hold. We got that. We're at resistance. Now, I sort of want to participate in a potential pullback into some sort of support area, right? That's what I'm looking to do. Hey, beans and greens. Thanks. Your plans are pretty spot on. Thank you so much. So what do I mean by acceptance? Acceptance is acceptance of a support and resistance area is a consolidation. For example, this here is acceptance. We have a higher high, higher low, higher high, and then price chops around here. This is sort of telling you that, hey, price is not being rejected, right? We're not pushing all the way back down here. So if we're not going to push all the way back down here, then buyers are stepping in to create this consolidation, and they want to push it back higher, right? That's acceptance of resistance. By the way, this is a very short form of acceptance, but that gives you a rough idea of what that could mean, because we're not seeing an immediate rejection. What we did not see is this move off the lows here at the open. We saw an immediate rejection, right? That's a V bounce reversal. So if we were to hold here for a much longer time and then broken lower, that's acceptance. Now, I have specific rules that I'll be sort of looking for that need to be met to sort of create a better structure. But as of now, we do not have that acceptance. So I took a short at the break of the 9MA, which would have been the higher low. And I'm looking for a push essentially back down to that support zone here at 20,000, sorry. But in order so I can finance my risk, I want to pay myself at 1.5R, right? If it comes and hits it, which is looking a little bit weak, and we can get that. Let's see. While I wait for this, let's go over other questions. So just waiting here, and looks like my time is going to be here over soon, but I'll give you an update. I'll share a comment on YouTube to see what happens. It is looking a little bit weak just to sort of close this, but we're just waiting, just a small pullback, see if we get it. And, I'll put my other exit here, and we'll see what takes place. So now what we want to see here is a lower low, lower high structure. Let me draw that out real quick. So this needs to be a lower low, lower high, and then push lower, because that will sort of give us that additional confirmation of a break lower. So just going to wait on that. The 9MA sort of has to now act as resistance, just as it provided support on the way up. I'll type in my answers on YouTube if time runs out here soon, guys. All right, but I'm just waiting here. I'm looking to see if we can get that drop. The 9MA should come down now, and then act as resistance if we are to get that pullback. Okay. No, I'm mostly on Twitter. You can message me, reach out on Twitter, follow me at trading_boxes. I share a lot there, and if you have any questions or something like that, you can go ahead and message me. All right, guys. But look, let's see if this comes down to target. I think it's time for Delhi to come back. It looks like it's time. Let's get Delhi back in here whenever he's ready. But look, it's a sort
Christian,
of
my
dropping
man.
down. Hey. Hey, by the way, we need a kick cam, all right? Before I get off here. We need a kick of the days snapshot, all right?
Oh God, for sure. I think that's got to happen. We've discussed it. I have so many. I've been like on an ordering frenzy lately. But you're definitely right. I think we need to add that into the mix. But Christian, before we close you out today, I just want to say thank you for being a team player. I know it was a little bumpy this morning. We had PAX in studio. We had a lot going on. We didn't give you the full time for your prep. But look at like a true gentleman, and like the way that you are as a person, and it's just a true pro. You did an absolutely fantastic job. You were spot on with your content. Waited for your trades, showed patience, discipline, structure, focused on the process. You're the best. I look forward to you each and every week on the NinjaTrader Live Network. So thank you again so much for joining us today.
Thank you, guys. Thanks, Deli. All right. You guys have enjoyed the rest of your day. Take care.
You as well. All right, everyone. Anthony Crudele here, and welcome to the NinjaTrader Live Network. We now are going to be bringing in the CEO of NinjaTrader to discuss Kraken and Ninja deal. It went viral yesterday. Messages were blowing up on Twitter. We're here to set the record straight and discuss what really is happening between Kraken and Ninja and how this impacts just, I think, the futures industry in general, and also the impacts for everybody that's at NinjaTrader. So if we can, let's get Marty in here live for he and I to move on with this discussion.
What's up, Deli?
Marty, how are you? How are you?
How are you? I'm great. I'm great, man.
Anything going on?
No, nothing's going on. Everything's the reality is today is exciting, but it's also business as usual. But a bright future. So,
yep. So let's talk about this, Marty. News is out. We saw the major news wires talk about this. We're going to talk about the size of this deal. What happened between Ninja and Kraken?
You put two mission-driven companies together, and pretty cool stuff happens. And there's a confluence of a lot of things happening in the world of finance right now, as many of you on this stream know. And really, you think about the intersection of decentralized finance and traditional finance, and we're finding ourselves right in the center of it. We've had a lot of demand for a lot of different products across futures, and crypto being one of them. And this combination, something we've been thinking about for a while. And there's so many exciting ways to talk about it. I can go in 100 different directions, but ultimately, at its core, it's an acceleration of NinjaTrader's mission to empower and be the ally of traders. To create great experiences, to create low-cost experiences, and to bring our technology and our platform around the world, which is something this enables. So we can go into all kinds of detail to explain that, but it's pretty exciting stuff.
Yeah, I mean, everyone's asking me, is the number real? Everyone's seeing the 1.5 billion number out there. Can you talk about that?
Yeah, so we officially, the Wall Street Journal did print that number last night, but we confirmed it this morning. It's a very real number. And it represents, the hard work of all the team in NinjaTrader to continue to build the business around the world and bring these different products and services to kind of create something brand new and advocate for traders around the world that really hadn't happened in retail futures for a long time. There's a handful of us that have been, in this space for a long time, and we're super excited about it. The numbers are absolutely real.
Yeah, and that is, according to my records, the biggest deal that I have seen for a futures only firm, Marty. Am I right on this?
You're correct. This is from a deal perspective, this is the largest in the space. And I also believe it's the largest acquisition by a crypto firm as well. So a lot of records being broken with this deal. More important to me than the size of the deal is, what the future holds for NinjaTrader. And we're very excited to be part of the Kraken team. We're equally as excited to be, it's in the press releases and things like that, but just to set the record straight, NinjaTrader will be an autonomous business unit and continue to operate the way that we have. NinjaTrader is not going to change our name. We're not going to change anything around the team. We're just going to kind of accelerate around the world and bring new products and new services around as we partner.
Yeah, I'm seeing some of the questions come in, and people are all curious. I mean, we've got a lot of Ninja customers out there, Marty, a lot of Ninja clients. What does this mean for not only the organization of Ninja, but what does it mean for the end users?
Yeah, for the end user, it's a great question. So if you're on the platform today, or if you're thinking about getting onto the platform, there's really no change. It's business as usual. No one needs to take any action. There'll be a customer communication coming out if it hasn't already come out. I think it may have come out a few hours ago, but it's business as usual today. But I think what it means in the longer term from a business perspective, there's some exciting things that we can do together. First, one of the things that NinjaTrader is licensed as an FCM in the United States. And one of the things that's very exciting about this is we had a plan that would have taken several years to be able to bring our products and services around the world in a way that we could accelerate our marketing and let people know about this. Like, we're a very unique company in that we're 100% retail and 100% futures. There's really no firms in a lot of different parts of the world doing that. And with this licensing, so the Kraken team has licensing in multiple jurisdictions around the world. We can bring this experience to we're going to get into the UK, we'll get into Europe, we'll get into Australia and many other places. And I believe that'll be in the press release as well. So very excited that we can introduce our products and services to more folks around the world. And as we start to think about NinjaTrader as a futures only platform, we now, with this kind of, I'll call it licensing arbitrage, we can work together to add assets and add products and continue to expand what traders are trading on the platform. We're still retail and we're still only futures today, but that over time, we'll find the right moments where it makes sense to introduce crypto and other asset classes. But to answer the core of your question, nothing's changing today, but just significant more investment in order to really speed up our roadmap and continue to expand on what we offer to the consumer today.
A lot of Ninja traders were asking me, like, if I'm on NinjaTrader, does that mean now I'm going to have access to trading Kraken products on NinjaTrader? Is that going to be something that happens at some point?
So the answer to that is yes. We're going to, at the right time, be able to introduce crypto products from Kraken directly onto the NinjaTrader platform. We're really excited about that.
Yeah. Why Kraken? A lot of people are saying, oh, Kraken, Ninja, kind of get it, or I don't get it, or wow, I really do get it, right? How did this come together to where Kraken was the best fit for us and we were the best fit for them?
Yeah, it's a good question. I think one of the things that's really, really important to us was that we would partner with somebody who cared as much about the customer experience, was kind of always pro-consumer and pro-employee as well. And they share that. But they also, Kraken has a really, really incredible vision for where they want to take their business as expanding across multiple asset classes. And NinjaTrader becomes part of that broader story. When we connected with the folks over there, you could see there's an extreme cultural fit They're very mission driven in what they're trying to accomplish and changing finance around the world. And man, it's a lot of fun.
Can you tell us a little bit about Kraken? I'm sure there's a lot of people out there that use NinjaTrader that maybe don't know much about Kraken. Can you take us into a little bit about their business and what products they offer? We know it's crypto, but maybe touch base a little bit on it.
Yeah, so I'll they do a lot of different things, and we'll continue to share more information about that as we're able to. But the Kraken is one of the largest global players in the crypto space. They operate with licensing around the world. I think they're at up to 15 million users on the platform, which is really exciting. And they're a very transparent company. They share a ton of information, so you can Google it and find out anything I'm going to tell you. They're transparent, super customer centric, and just all about security, all about technology, all about pushing the boundaries of what is possible, which totally matches, Anthony, all the stuff that we're doing. So.
Yeah, no, I love that. And, I've looked into them. I actually had an account with them, and a lot of what you said, I see how we're aligned in so many things. And I'm really excited about how this looks down the road. I mean, I know this is just the beginning phases of it, but what this means down the road,
it's gonna be fun.
Is really interesting. Yeah. And I think I have a couple questions left. One of that is like, what is this vision? What is this vision about? What does this mean for the future of this industry, right? I mean, when you see two big guys, come together like this, NinjaTrader and Kraken, it's powerful, right? I mean, and you could see how the world is reacting to this. Is this setting the tone for what in the future?
Let me start by going backwards, and I'll take you back to, when I'll take you back 15 years, 20 years. Retail futures wasn't really something people traded, 15, 20 years ago. When you think about the introduction of like mini products that really didn't start to take hold until over 20 years ago, 25 years ago even, that was really when those products became accessible to retail traders. Before, you needed just such a significant amount of capital to even enter the markets. And that all changed when the mini products came out. And then you go back to 2019 when the micro products came out, and that was when you could start trading futures with less capital, even if you just wanted to start to try. There's less risk and less capital needed. What it did at that point, Anthony, as you know, was it really just expanded the addressable market in the space, and it made this asset class something that was attainable and accessible for everybody. NinjaTrader at that time made a decision that we were going to cater to this kind of this new class of traders that was going to enter futures. We became an FCM. We introduced a disruptive brokerage service in 2014, and we did so many different things. And all of that was in service of better customer experience, better technology, lower cost. And so that's kind of how we got to where we are today. And we're so happy to see that so many other firms have decided that they believe the same thing we've believed for a long time. So that's kind of how we got to today, right? The next evolution for NinjaTrader is, as we have reached this kind of scale where we can take our experience internationally and where we can take our experience multi-asset class, and at the same time be able to introduce on-exchange U.S. derivatives to the global community of traders at Kraken. So when we think about, you put all those things together, it's really great for the industry and great for traders. And it's been like a 20+ year evolution to get here.
We just talked about this at Boca, right? I mean, the things are accelerating at a pace now, but you and I have been in this fight for years, decades, talking about retail futures, and it's amazing to see what's happening right now. I mean, I think about it every day. I go home and I'm like, man, I just can't get over what's happening in our industry right now. It's phenomenal. My last question is,
we used to give away our technology for free 20 years ago, just so people could try it and explore the markets. And we got laughed out of the room. You're giving free technology, free service, all of this stuff to retail futures traders. What are you guys doing? And, I can look back and, you started this conversation, Deli, with the print, right? The 1.5 billion. I look back to the journey we've been on. and how pro industry it's been, how pro trader it's been, man. It's such a great thing to think about. And you were there from the early days, man. It's awesome.
You and I were there from the early days, and I'm so humbled to be part of this organization right now. You're the best leader in the space. It goes without saying. What you've done is incredible.
Appreciate that.
No one has done what you've done. My last question is, what does this mean for just retail futures in general? Like, even looking just like I think about CME products right now, how busy we're getting, how big we're getting. What does this mean for the suite of micro products expanding into a big company, into Kraken? I mean, this is exciting.
It is. I think at a more macro level, if you think about the trends going on in retail futures, you're not only going to see participation go much broader and more global, but you're also seeing, new exchanges pop up. Like, the support of retail traders has never been stronger. And NinjaTrader has been an advocate since the beginning. And you now have smaller, more accessible products, and those product suites are going to expand, not just from CME, but they're going to expand from multiple different exchanges. And the kind of intersection of binaries and the event contracts. There's going to be other products coming out that are going to be really, really exciting that I am not allowed to quite talk about, but we'll be on a show in the future telling the world about them when we're allowed to.
Yeah.
But the products is going to expand, and this is going to become much more global and much more of a household thing. I think it's kind of probably a little bit similar to how, how people have, the self-directed trading movement and the rise of retail when a lot of firms came out, you get all of a sudden you have these mobile experiences. They made it really easy. You have all these people, how many years ago, that started trading options, and that was not really a thing before then. And this is futures' day. It's time for futures, and it's happening right now. I'm really proud to be at the tip of the spear of this thing.
Yeah, and I'm proud to be part of the Ninja organization. What we've done here at NT Live would not have been able to be done if it wasn't for your vision. Obviously, you coming in and supporting me and this NinjaTrader Live, which we're just killing it, by the way. Hey,
dude, this is awesome.
To NinjaTrader Live. I mean, look at where we are here right now, Marty. I mean, this is phenomenal. I wish we were together in studio, but that's going to happen soon.
We'll tell the origin story later, man. But fun stuff.
Yeah, I mean, there's a lot of stories that you and I are going to have to share in this studio over time. It's going to be a blast. Thank you again so much for taking the time. And yeah, I know we need it. A round of golf. It's all coming together. You've been a bit busy, and again, I speak in for everybody in this industry. Thank you so much for what you're doing. I got to tell you, it takes people like you to go out there and to really push the needle. And I couldn't be more excited, like I said, to be with Ninja, to be in this space all the years, 3 decades I've been in this space. I've never been more excited than I am at this very moment. And, I am so bullish on this industry. I'm bullish, obviously, on this company, but I think what you're doing is pushing the needle to make me bullish on exchanges and make me bullish just on futures as a whole. It's super exciting. Thank you again, my friend, for your time, and we appreciate your leadership so much.
Thanks, my friend. I will see you in the studio as soon as I can get down there, and we got a lot to share with the community watching. And by the way, you guys are absolutely crushing it. This is exactly what futures traders needed, and I'm so glad that you guys are live. So keep doing what you're doing, and I'll see you soon.
Thank you, Marty. All right, traders. Next up, we are going to go to our senior economist, along with our senior market strategist, Tracy Shuchart, Shy Girl, and Jim Cagnina for Hot Commodities.
Hey, Tracy, how are you?
Hey, Jim, how you doing?
Pretty good, man.
Good. So,
yeah.
Are you pumped after hearing Martin?
Yes. I've been here. So, Tracy, I've been here about 4 years. And from the moment I walked in the door, we have a really nice office in Chicago. And from the moment I walked in the door, his energy and the culture that he's built within the organization is incredible. You just like being there. You the collaboration. You have employees diving for loose balls all day long. I mean, it's a fun, great place, and they're totally focused on the vision here, and it's great to hear Marty today. So yeah, I was happy for it.
Yeah, I'm excited. So let's get into some commodities here a little bit. We have oil finally perking up. Right now, we're up about 1.3%. I think that's on the back of a couple of things. That is, the U.S. Department of Treasury just announced new sanctions on China teapots because, as you know, they've been buying millions of barrels of Iranian oil. So there are new sanctions announced on them. We also had good housing data, and I think that this kind of speaks to maybe the economy isn't doing as terribly as everybody thinks. And because the narrative kind of around this crude oil trade has been, we're going to be in a recession and there's going to be no demand for oil. Besides the drill, baby, drill, which hasn't happened and won't happen. But, there's still been a lot of recessionary fears around this trade as well. And so I think that's also helped this afternoon. And then we just got a headline today, just a couple minutes before we just got on, that says U.S. is poised to extend Chevron oil deadline past April 3rd. Now, crude hasn't really reacted to that very much. So I think that the market kind of knew that was going to come anyway, because it's been talked about for a little bit. But what are you seeing on the charts over there?
Yeah, so on the intraday chart, it was kind of muted until the open, right? And then we had these just kind of pretty significant big green candles on the way up. We shot over. I have a lot of lines on my charts. I apologize for that, but we broke all of these barriers: JAX3, previous sessions high, DRAX4, R1, and then a really important call resistance level. We wick through this 1-day max. And, the average true range now, we're getting close to getting to the average true range. And I think, let me tell you what the number is. It's $1.69 right now on crude, and we're already up $1.57. So there could be a few more cents on the upside here. Looking for places to buy at this point. I'm not interested in getting short. It's strong.
Yeah, absolutely. And I think what's interesting is, we keep holding that 65 area, and everybody is kind of asking why. It's 65 is where shale break-evens are on average. Some basins are more, some basins are less, but we keep seeing that 65 area pretty much getting bought. So hopefully we'll break out of your hamburger.
Breaking out of the hamburger bun on the upside. I know. So, but you can see that, to your point. I mean, every time we're dipping into 65, in the 65 handle, we get these buyer wicks. You're right on point there. Buyers are involved here right now. So we'll see how high we go. We have a couple of moving averages here we got to get through. I think this is the 21 EMA. That's my next target. But if we get a close above this, just from a technical standpoint, get a close above this high wick up here at 68.50, then I think we could have some more upside.
All right. There's hope for those oil bulls out there. Let's see how it goes. Let's move on to my favorite, silver, of course. We had kind of bouncing off of those lows. No real news. I mean, we kind of saw overnight, we had a pullback along with the equities and a pullback in gold. And I think mostly the silver and gold pullback we saw was kind of a reaction to that stronger dollar move that we had overnight. I mean, besides that, what are you seeing on the charts?
Well, it's nice, on a day. We'll start with the daily candle here. I'm seeing, a nice kind of. We tried to get to a double top up here around $35 and didn't quite break into it. And then a little bit of a sell off here, right at that 8 EMA. Everybody knows I'm a big fan of the ADMA on a daily, and it's going to be for me, it's a test of continuation selling or sideways action, depending on where we close around that. But then when you drill into I know I have a lot of lines here, Tracy, into the
I'm a big fan of. You should see my chart.
I know. So, but anyway, it was decent sell-off today. We definitely have a lot of support, 3380. I have a little rectangle drawn right there. It's kind of solid, bottom of the opening range, bottom of the initial balance. And again, we have this textbook retracement back up to 50%. I like retracements on dailies more than intraday, but sometimes on intraday they're pretty good. And so we just kind of picked that off, and that was previous sessions lows also. So there's two areas of interest there. And if you combine that S1, this is also a good area of resistance. So we're trading between resistance and support on the downside right now.
So kind of choppy. Let's move to gold. Gold kind of had a similar move. We hit all-time highs yesterday, another all-time high, I should say. And then we have sort of come off again. I think a lot of that has to do with that stronger dollar move overnight.
Yeah, we had that stronger dollar move. I'm just kind of looking at the chart here. This is way stronger than silver. We don't have that 2-day pullback. This is a doji. Today, this is a baby candle, though. And when I say baby candle, it's a small body, right? And that kind of could suggest maybe market happiness or just market uncertainty. It's bigger. It's not another doji, but it's pretty subtle. So I'm not sure on direction here, other than you got these moving averages that are just shooting up. You got nothing but blue sky above here. And you have a really nice support's pretty far away. So from a long-term point of view, again, I'm looking for places to buy. Today, we did same thing we saw in silver. We got that retracement back up to the 50% level right now, right next to that call resistance area. So this is going to be pretty sticky resistance maybe for the rest of the day, unless we get some unplanned news from somebody. Or the markets start moving in a different pace. And then support down here close to S1 at the bottom. So I'm going to look at this volume profile here and just see how it matures over the day.
Oh, absolutely. Again, kind of range boundy down here.
One thing, Tracy, let me interrupt real fast. So it is a $32 ATR in gold. And it's a $40. I'm sorry, the ATR is $40. We've moved about 32 today. So if something does happen and we get a breakout to the downside, as an example, there's room to go.
Gotcha. So we'll keep an eye on that for sure. Thank you. Let's look at nat gas. We haven't looked at nat gas, I don't think yet. Which is, we finally hit over. Almost that $5 mark, got slammed down. There's not, we've had better weather. That certainly helps. But what are you seeing in the charts? I mean, there's no real fundamental. We had that big squeeze, which looks like that was just that squeeze, that top candle. And kind of a move lower. That said, overall, nat gas is still looking good, being the fact that we traded between, $1 and $2 forever. So feels like we've gone up a notch and now we're at, that $4 level.
Yeah, no, you're absolutely right. Now, the one thing that I'm kind of curious about is we have some really nice support over the last, 7-8 trading sessions, just around that $4 even level where my crosshairs is. And then we failed to have a continuation buying candle today. Instead, we have what's called an equal and opposite. It's not perfect, but it's something I'm looking at right now. So I think sellers are finally stepping in, but I expect some more sideways action, I think, in this consolidation action. And you can see the 8 and the 21 moving averages are about to be tangled in love right now and just get all kind of like a bowl of spaghetti.
Yeah, and I think as our LNG capacity expands over the next couple of years, I think that is supportive of natural gas in the longer term for those people that are looking for those kind of longer term activities, because we have a lot of export capacity being built that we'll see over the next, from this year to 2028. So it looks good for export capacity for sure.
So Tracy, you're universally thought of as like an the energy expert, like the number one energy expert. And you really are. And so tell me a little bit more about the capacity. What's driving this new capacity that's coming online?
So, well, this has kind of been planned for years, export capacity for U.S. LNG as that sort of global demand has grown. And U.S. is now the largest LNG exporter in the world. We surpassed even Qatar, which is amazing. We're building out more capacity. And that just means, the U.S. has had suppressed natural gas prices for so long because it had nowhere to go. Right? We produced so much of it through shale that we were just flaring most of it, right? And a lot of it was landlocked. We even had in like Waha natural gas, which is in the Permian Basin, that's gone negative many times. I mean, they're paying you to take it because there's just no way to move it. There's nowhere for it to go. And so if we're building out a lot of pipeline capacity, and this is really why I like midstream natural gas right now, which is transportation and storage, is because now we're building out this pipeline capacity to go to the Gulf, so we can now export that globally to the world, which will be supportive of natural gas prices. Do I think we're going to see any crazy thing, natural gas prices like Europe does? Absolutely not. But we won't see, a $1, $2 natural gas probably any longer.
So I live down in Charleston, and we have the ports of Carolina down here. And in Charleston Harbor, they just finished a dredging project not too long ago, which makes this port the deepest port on the East Coast, which means you could get bigger container ships, heavier container ships. Every once in a while, I see these, they're not container ships, but they're huge ships that look like a giant banana boat. And I'm assuming there's some sort of liquid in these, right? Some kind of, I don't know if it's natural gas or not, but would this be a destination for that or no?
Yeah, absolutely. A lot of product we buy from Europe that goes to the East Coast, like gasoline, just because of the lack of refining capacity that we have in that area and the lack of pipelines that we have, because Colonial's kind of full. That's our main pipeline. So we do import quite a bit of petroleum finished product from Europe.
That makes sense. All right. So now I know what I'm looking at when I'm sitting at the beach.
There you go. And for our last chart here, let's take a look at platinum because it's kind of the weakest of all the precious metals, although I consider it an industrial metal as well. But it's kind of the weakest today, so I just thought we'd take a look at that for comparison. I love trading platinum because it's like kind of a swing trade because it seems to be very range boundy right now between that 850, 900 buy area and then, just to over 1,000, and then it pukes. Eventually, I am very bullish on platinum over the long term. So I do expect us to kind of break that high, that $1,000 to 1,100. I know that's a big range, but just looking at a bigger picture. So I do expect it to eventually break that area that's served as strong resistance for now.
Okay. We are having a healthy pullback the last 3 days, but on a daily candle, I think this market has a tendency to generate big candles for some reason. Yes. Again, this is just kind of a regular retracement right now. Nothing to worry about on the downside whatsoever.
Well, all right.
And let me just talk. Yeah, on the intraday too, we're about average true range on platinum's $23.88. We're at 21.5, so we're pretty much there right now. But it looks like we are trying to break out a little bit. S2 would be a target for me if I decided to get short here. If we had a breakthrough below the opening range.
Excellent, thank you. All right, I guess that wraps up hot commodities for today. Up next looks like The midday wrap up.
We're calling them midday markets now. But great talking to you.
Oh,
Appreciate
midday
your insight.
markets. Sorry.
Yeah. Yeah. No.
Thanks,
I know.
Jim.
I
I'll
know.
catch you tomorrow.
Thanks, Tracy. All right, stick around with me here. We're going to do some midday wrap-ups. Another incredible day. Um, I'm meeting new people every day here. I really am. And I don't have my YouTube chat up. I apologize for that. Let me see if I could pull it up here. Everybody be patient with me for a second. Click on some buttons. Click on some hamburger dots up there. And let's see if we could do it. Bear with me. Almost there. Pop that chat out. Appreciate everybody coming. We're just having we just have some great folks here in the chat. Great community, as usual. And it's a bigger community now. It's a greater community now, and we're humbled by your participation. We appreciate everybody being here. For the old timers that were with me before, you're going to see a whole bunch of new folks. For the new folks that are here, you're gonna see a combination of old folks, new folks. And there's some really great stuff going on here. So thanks for being here for sure. Appreciate you. Let's start it with the E-mini S&P and take a peek what we're looking at here. I like to draw these. I have the desktop, the NinjaTrader desktop, and when we have a tool that you could measure, a ruler tool, where you could measure different segments within your chart. And so I like to look at the ATR, right, the average true range. So average true range. On my market analyzer, I have a column there that shows what it is. It's 106 handles or points, right? A point in E-mini S&P is 4 ticks. It's called a handle. And so we're about 23 points short of the ATR. And that doesn't mean anything because it's average, right? It's an average true range. And I do a 14-period look back. But it helps me, especially when we're making new lows or making new highs. I'm like, all right, what's the potential of direction right here? Now, in this particular case, we have some really nice support. And I'm going to draw a rectangle, which I always do. I'm just going to throw a rectangle up here. This is support right now. I mean, we've wicked through it once, twice, almost 3 times, 4 times. Buyers are coming in down here. This is approximately around 50. Am I in the right month? Yeah, 56.90. And so this is kind of the floor right now. And we have double bottom, you can call it. You can call it a double bottom. Why not? This is a 30-minute chart. And it's been pretty good. Then we had this, opening range rally or initial balance rally. And it pretty much got to, interestingly enough, the early morning highs. And I'm going to draw another rectangle, say, all right, here's resistance. And this is just a tool for me to help me understand, help me visualize what's going on in my mind. And so, sure enough, double top here, right? We had sellers come in, sellers come in, sellers come in again. And now we're kind of retracing back down. So the next thing I'm going to do, the next piece of the puzzle, is I'm going to draw a fib line from the trend, the recent trend, right? The recent trend started here, right? This is the 9:30 to 10 o'clock candle. This is where the recent trend started. And I'm just going to go measure it, click low to high. And I'm going to look at where price is in relationship to the fib. And we're kind of, retracing back down to the 38.1% area as well. So this is kind of like a normal behavior, I would say. I don't think this is out of the ordinary, this kind of behavior from a bigger picture price point of view. But right now we have, a doji. Let's kind of look. It's not a perfect doji, but it's good enough for discussion purposes. Big rally and then a doji. Now the body of this candle is super, super small, right? So the official definition of a doji is the open and close price of the candle are the same. And I kind of expanded that definition to the same or nearly the same, right? Really small body. And then we have a big seller's wick on top, big buyer's wick on bottom. So this is a pause, right? This is a pause, and this is the market saying, all right, we're either happy right now, we're taking a breath, or the market could be saying, I'm not sure what's going to happen. I'm uncertain, right? Market uncertainty. Well, next 30 minutes, sellers came in. Next 30 minutes, sellers came in, driving us back down to that 38.1%. And then just to look at the volume profile, it's great to see some of the young guys and gals trading with volume profile near and dear to my heart. This is maybe a P-shaped distribution. It's not a perfect P shape, but it looks like a capital letter P, right? Where you have a majority of the volume at the top of the distribution, and it looks kind of like a P, right? And the skew is up north, with the point of control really, really high here, right? The point of control is really, really high here at 57.56 half, and that means a lot of folks thought this was a good place to make a trade, buyers and sellers alike. If you go down a little bit longer, we have a competing point of control right at that high vol level, right? And that puts support 0 DTE level that we get from MenthRQ. And that's the meat of price happiness, we'll call it. This is the meat of price happiness. And we're through it now. We're through it now. But I still have it on my radar screen, right, for later on today. This is still an area of interest for me on my radar screen. We have JAX 4, we're just a wick through. It's not a major one, but then JAX 2 is a little bit further down right now. So right now, in my mind, this is a standard retracement move, and I expect that we're going to be sticky between that 38.10 and the top of the initial balance, which is 57.60, until we're not. In other words, I could see some trading within that range, and then maybe we'll get a breakout to the upside, maybe we won't. ATR right now, we're way off the ATR, right? The ATR is to 106 for the 14 period look back of the average true range, and we've only gone high to low 83 handles. And I know for old timers, it's like only 83 handles, but for the new paradigm of this market, that's we have not met the potential yet. On the upside, we have the high vol 0 DTE level at 57.80, aligned right up with R1 on the daily pivot, and that's that's a target. If I'm long, that's a target for me up there as well, and it'll also get us close to the ATR, right? I could pull up my ruler, I can measure it. That's still not even 106. It's only 98. And then if you go back to the next level, you got 57.90. So if we get a drive back up to this rectangle here, the upper area of resistance, very possibly we could break on through to the upside. That's what I'm thinking about the E-mini S&P. Let's pivot over to the micro NASDAQ. I know a lot of you folks are trading the micro NASDAQ, and great market to trade for sure. Anyone trading the big ones? Let me know if you're trading the big ones, because you're brave. You're braver than me. That's a spicy meatball. Same thing. P-shaped distribution, point of control skewed to the top. We did have that JAX 1 level. Now, JAX 1 is the most important gamma level in my mind, and we're literally, oops, I'm in the wrong month. So that's interesting, though, by the way. Hang on, let's go back to March. This is going off the board tomorrow. So on this contract that we're not trading, because there's not as much volume as the front month, I like to look at these. That's why I still have it on my board. I like to look at these because it gives us these gamma levels, and you could do the mental math and say, okay, there's a price differential, 200 point price differential between the March and the June. And you can see where the JAX 1 level is on the March level, and you could do the math and say, all right, what's the potential here in the June contract? Let's go over to the June contract. And notice that the JAX levels are a little different, but JAX 2 is right where JAX 1 was. So that's a target, and also same thing, almost the exact same analysis. This is very systematic. When you see these two charts looking almost the same, it's systematic price behavior as opposed to unsystematic price behavior, right? Unsystematic price behavior would be some of the components within one of these stock index futures are driving price differently. They're reacting to unique information, whether it's earnings or something else. But this has been pretty systematic. When these charts look almost identical, that's what I'm seeing. Same kind of area of support down here around 786, 785, more or less. Regular retracement. I don't even have to draw it. I could see it happen. All right, we're going to jump down to my favorite I'm going to get you guys interested in treasury bonds and treasury notes if as my life depends on it. If my life depends on it, I'm doing it. So this was an interesting. This is almost a inverted V-shaped pattern right here. And after the European Open, after the London Open, we just took off. We just rallied considerably, and we talked. Some of the guests on the show talked earlier today. Talked about what happened in Europe overnight or early morning, so I won't double down on that. But nice rally up here. But when the Open happened, boom, sellers came in. This was a bearish engulfing candle, and then continuation selling, initial balance, pause, continuation selling past the JAX 1 level, which is at 111 and 830 seconds. So that's where we're at on there, and it also corresponds to the bottom of the value area. So this is bearish today. We have some at this point anyway, I should say at this point, and then we have previous sessions highs right here, which is a great target if you're trading the 10-year notes. It's at 111, spot 03, and then call and resistance area down here as you would expect at 111 even. So that's just the way the 10-year notes. Just to kind of look at it daily. We're still range bound. We're still range bound. And I don't know if this is a function of the expectation set by the Federal Reserve or other factors. But right now, we've been trading. We're in the hamburger bun right now. We're literally we see resistance up here around 111 spot 1.5, and at the bottom we see support at 110. 18.5. And so this is a really nice side. I thought we were going to break through today. I really did. We don't need this line anymore. I thought we were going to break through and close above and attack this wick. I might even send a tweet out about that, but it didn't happen, right? Sellers are coming in. Sellers are coming in. Sellers are coming in. Just as buyers are coming in down in my lower rectangle, buyers are coming in, keeping this market really, really tight. So yeah, the moving averages are subtly moving up, but I don't know. We'll see how that goes. I mean, this is a long-term fib. You could ignore this for now. Don't worry about the fib for a second. And then we could kind of look at the yield curve right here, right? So I have the 10-year and the 2-year yield, and I'm looking at the CME Group's micro yield. I don't know if you've seen these contracts before, but they're pretty good. They're pretty cool because it's a pure yield product. You could plot them both on the same chart, and you could see the difference or the spread between the 10-year yield and the 2-year. And then you could calculate the distance between. Right now, we're at about 29 basis points separation on the normal side. Remember, we were inverted before, right? We were inverted during this post-COVID period for a long period of time, but now we're good. So that's the story there. We'll see if it continues to separate the 10-year, the 2-year, becoming more normal, I guess, or not. But time will tell. So that's the story of the 10-year. We talked about nat gas. We didn't talk about the U.S. dollar. So I'm using the Euro FX as a proxy for the U.S. dollar, and you can see we kind of have a double top here. This peak top back here, that was November 5th, 2024. This is a daily chart. I know we're covering a lot of ground here, but this is the Euro FX versus the US dollar cross, they would call it, right? The currency pair or the cross. And it's in the futures market. These are futures contracts. In the CME Group future world, most of the currency pairs, not all of them, but most of them have the US dollar in the denominator, right? So it's not the US euro, it's the euro US. So it could be inverted if you're trading over the counter forex, depending on where you're trading, but it's probably not for the euro anyway. For the Japanese yen, for sure, it's going to be inverted for you. But great markets to trade. They're liquid. You have access 23 hours a day. They're traded on a transparent, regulated exchange. There's no dealer desk in the middle. There's no over-the-counter stuff. And the price quotes are the price quotes, right? There's no difference between which dealer you're using, right? It's the CME Group. So This and among other things, right? There's no carryover interest overnight. There's no settlement period. You get long and then you get short, and then you can get short again, or you can get long again. You're free, right? It gives you freedom to trade the futures markets, and they're liquid. They're good. They're good markets to trade. You could trade all the major currency pairs: British pound, Swissy franc, Canadian dollar, Aussie, Japanese yen, and then some non-majors. Right? We got we've been looking at the Mexican peso for a while when we're talking about tariff wars, whatever they're called. In any event, so right now the dollar's really, really strong, having a little bit of a pullback here. There's no retracement to be seen yet. It's still pretty high. Again, boom, we're tagging that 8 EMA, that moving average. And so we'll see if we close above it or below it. That's going to be it. That's going to be part of on my radar screen. It could be a momentum shift down toward the 21, but it's too early to tell right now. We need a close of a candle below the 8 EMA, and then we need a confirmation candle the next day before I'm like, all right, this is going to be a normal retracement back down. Oh boy. All right. Let's go back. We talked about this yesterday, I think. Russell 2000. Let's pop that guy up. Anybody trading the Russell 2000? Pop it in. This is small. This is the small cap stock index futures, right? This is the smallest of the small. This is the Russell 2000. And usually it's having a little bit of a rougher time in this environment, right? These mid cap stocks have they rely on borrowing more than the large cap. So if they're more sensitive to interest rates, right? We're kind of sticky, right, at the Fed with interest rates. In SOFR, a lot of folks borrow at SOFR plus. A lot of companies borrow at SOFR plus, and a lot of individuals borrow at SOFR plus. So that's one of the reasons why it's having a hard time. My guess is the supply chain stuff is pretty much worked out now, so that's not a big deal. But I'm going to go ahead and draw a fib line here, and let's put this fib on here. High to low. And we're okay. So not only are we creating separation above the 8 EMA, we're starting to penetrate the 21 EMA, and we're getting right to that 31.8% retracement. This is a long-term fib, right? And we're talking long-term bias. We're not talking intraday bias, but this is long-term bias. Short Life Hacks, love the name, by the way, says, I only trade RTY to dilute risk against other equity index positions. So I shorted against the ES at a ratio of 2-to-1. Totally makes sense. I like that. And if you're position holding, you'll probably get, if you're holding these overnight, there might be, I can't remember the ratio for a CME group reduction in margin, a spread margin, but instead of lagging both, you might get a benefit there as well, in addition to what you're doing. But that makes a lot of sense too, right? Let's get long. That's a spread trade, basically. I mean, a lot of people spread, inter-market spreads, they call them. Not intra, but inter-market spreads. So that's awesome. So anyway, let's take a look at a 10-minute just to see where we're at here on the 10-minute. Yeah, again, systematic price behavior on all the stock index futures. Let's just go to my rectangles. Let's get some rectangles in there. Rectangle number 1. Area of resistance. Area support. Sell-off. Huge rally. Now, we don't see the same retracement we saw in the other, I don't think. Let me put the fib in. We'll go low to high because that's the recent trend. Yeah, so we're nowhere near that 38.1, right? Buyer's wicks, three candles worth of buyer's wicks. This is looking probably a little bit more bullish even. We're right at that JX3 level, and then previous session's high is right where resistance is. That's my green dotted line up there. ... So that's another area of interest. A lot of times traders will look for areas of interest that are important to them for breakouts or to reinforce areas of resistance. So as an example, someone might say, all right, we get a close of a body above previous session's highs, then I want to get long. right? We've penetrated through it. Buyers are taking over. This could be a transition. Alternatively, you could say, all right, if we kind of bumping up against this thing again, this is really good resistance. So I want to get short, and I'll just put my stop a little bit above it to see if we can get some retracement back down to a regular retracement area. So pivot kind of in the middle. Love the pivots. Jax 1, interestingly enough, is far away. It's far, far away in the June contract. That's at 2075, give or take, at 10 cents. I should just say the number, but no, I think that's right. I think it's no, I'm sorry, 2075. 2075 is which is a round number, which is where the Jax 1 should usually will always be, right? It'll always be there. So that's the story of the Russell 2000. Let's keep moving here. We haven't talked about, we really haven't talked about the Dow. I'm going to go ahead and click on Dow. I haven't uploaded it for a while, so I haven't clicked on the Dow. Anybody trade the Dow, the $5 Dow? Each point, it's not. There's no fractions here, right? Each point is worth $5 per contract. This is the classic Dow. There's minis. There's micros rather. So I guess you can consider this the mini Dow, which it is. $5 a point. Micros are 50 cents a point. And this is another great market to trade. And you can see it's systematic behavior again, but different, right? So let's go ahead and add that rectangle. I mean, this is a nuance. This is a nuance. The chart almost looks identical, except when you look at it, area of resistance up here overnight, we finally broke through it and we're trading above it right now. So I love when I see these kind of rectangles, because you could draw a line, but I don't think resistance is a line. I think resistance is an area. These are volatile markets. You have a lot of movement on the dome and trading ladder. But in this case, we're trading above it now. So this resistance is now support. This resistance is now support. We're driving up toward R1 right now. Previous session's highs, we're trading right at it right now, which is, again, area of interest. Looks like S-Dust trades the mini Dow. I love that. Let's go ahead and get some, let's get a ruler. Get our ruler tool in here. We'll go low to high. Low to high. And just see what the range is today. 575 points. 575 points. ATR, 694. I mean, a 694 point move in a day in the old days was like it set your hair on fire. You're like, oh, like the world is ending. Oh my God. Anyway, so, again, we haven't met her. When I think about that, we have another 120 points potentially if we continue to break on up through the upside, right? And then we got a blind spot here. This is I got to have Fabio back on to talk more about blind spots. But this is an area of confluence of other indicators that he's kind of proprietarily shuffled together in the deck. And so, again, another area of interest from our Mentor Q friends. Build Back Broker says resistance isn't a line. It's an area. That's right. You are absolutely right. I agree with that. I mean, they're too volatile. There's too much, you could wick through several ticks and just pop right back down in a second notice, right? It's like, all right, so that was just regular market dynamics. That wasn't us permanently blowing through this area of resistance. And so, one of the things I like to look at is a confirmation candle, a confirmation candle. And, we closed above it. This was a 10 to 10:30 candle. And then the next candle was a confirmation candle. I was like, all right, so it's sticky now. This is not it's not a fluke. It's not a fake out. It's not, I know a lot of people are like, whoa, they're running stops. That's not what this is. Now we're sitting on it right now. Now we could break down for sure. We could sell off. I don't know. There's going to be some systematic components to this as well. But this is just kind of a subtle difference between this and between this and the other stock index futures. And SciFade says, is that a free volume profile or is this the order flow volume profile? This is the order flow volume profile, SciFades. I love this. I love the volume profile. I mean, today, this is a really good, we could have really good discussion on volume profile on this chart alone. You see a double distribution, right? You'll see a volume distribution at the top of the chart. You'll see a volume distribution at the bottom of the chart, and then you'll see a volume void. I know it's not zero volume, right? It's not zero volume, but a volume deficit in between, right? It's not a lot of volume. Not a lot of people want to spend some time in this area. They didn't want to do deals in this area. They wanted to do it down here, and they wanted to do them up here. It's a capital B shaped distribution, I think, is I think what the textbooks call it, but I'll call it a double distribution, right? There's two of them. It's not necessarily uncommon. Usually you see double distributions where you had a bulk of activity in the pre-market or overnight, right? Remember, futures trade 23 hours a day. I'm tracking all the volume all day. And then you'll see it, and then after the open, you'll see another distribution. Not always. Sometimes it's just one smooth Gaussian bell-shaped curve, just like they taught you in 8th grade, or in my case, it was probably senior year in high school. But what does that tell me? Well, it tells me that there's not a lot of interest down here. So let me just do my region highlight tool and just to kind of talk about that for a second. We have some time left, not a lot, but we have a little time left. So I like drawing this region highlight tool and say, all right, this should be support. I'm going to add this to my arsenal of support, this deficit, this area of price unhappiness, I'll call it. And so, on one hand, it's like, all right, if I want to get long somewhere, this could be a stop area. Alternatively, you get a breakdown through this thing. It could cut like a knife, right? This right through butter. So you got to be careful here. But it is definitely an area of interest. In this case, it's support for me. So I just kind of visually threw that up there. Anyway, it's highly customizable. The other thing I wanted to, before we go real quick, we're going to have the Order Flow Labs guys back on this afternoon. They are extremely awesome. You can anchor the volume profile. I think I showed this last time, but I'll show it again. Right click, drawing tools, just kind of hover your mouse over the second menu that pops up, and then you click on that Order Flow Volume profile. Activate your cursor. And let's say you just wanted to kind of say, all right, I just want to look at from the open forward. So just click, and it provides that profile. It's going to look similar, but sometimes it looks a little different from the open going forward here. And a lot of folks just use that. They just anchor it, just like you'd anchor VWAP, right? Volume weighted average price. All right. Yeah. So OLF is fire. You have that right. SciFades for sure. Kaz, good to see you, buddy. Thanks for being here with us. Market snipers here. We got some great individuals joining us. Appreciate you guys doing that. So we're going to wrap it up for the morning. We're going to come back strong at 2:30. We'll do a really quick kind of edge report, and then we'll get to the Order Flow Labs guys and do some live trading at the close. So thanks for being here with us. We will talk to you in a little bit.